Hey, welcome back everyone to the Black Brain Trust. This is episode 161 here with my co-facilitator, Lionel.
What's going on, everybody? We back on our main channel. How you doing today, Mike?
I'm good, brother. Yourself?
I am well.
All right. Please hit the like button as you come in. Share if possible. And we are not certified financial planners. If you want a CFP, please go to cfp.net and find one in your area. There is a docket in the description beneath the video. We will get started. All right. The first item on the docket is from businessinsider.com. Bayer plunges after jury finds his Roundup weed killer caused cancer. Shares in Bayer plunged 12% in the morning trading Wednesday after a San Francisco jury found one of its customers developed cancer after using its Roundup weed killer in his yard. The decision strikes another blow to the German pharmaceuticals group in August. In August, a jury ordered its Monsanto unit to pay $289 million after determining it failed to warn customers of the potential cancer risk of two of its weed killers, Roundup and Ranger Pro. The verdict was cut to $78.5 million on appeal. Bayer, which generated close to 40 billion euros in sales, or about $45 billion, and $4 billion in operating profits in 2018, took control of Roundup after it acquired the agrochemical company Monsanto last summer. The jury will now decide whether to hold Monsanto liable, raising the prospect of another multi-million dollar verdict. Bayer stock has slumped by a third in the past year, wiping more than $20 billion off its market value. Headwinds remain as the company faces lawsuits from more than 11,000 farmers, home gardeners, and landscapers. It's set to appear in six more trials in the federal and state courts this year. What do you think about this, Lionel? Chemical company Monsanto originally, and now Bayer, stock plunges. This is not good for a company like this. I hope you're not. I hope anybody who's invested into this actually gets out at some point because I don't see this. I don't see anything positive coming out of this.
Yeah, this is not good. Now, I find it somewhat hilarious that people are looking at their money. People invest in Bayer, and it shows that investors, not all, maybe, but investors are looking at the morning squawk or the morning news, business news, and they all of a sudden it says found out Monsanto Roundup causes cancer. So they like, wow, I don't think this is good. And people are getting out. So it shows that people are watching their money. Now, Monsanto, on the other hand, there's been numerous of documentaries across over the years how farmers talk about how Monsanto was strong arming them out of their own land, um, um, giving money to lobbyists for politicians to change the laws on whether farmers can keep their own seeds, things like that. And the tests on Monsanto products have a lot of it have really been um, still in test. So they've been making a lot of money on their products when their results been still in testing. It's inconclusive as it cause cancer. Now you have this. Yeah, that's a big blow. That's like a gut shot because if it causes cancer, it's Roundup. People use Roundup on your lawns. People use Roundup really on maybe I would say house plants. people use Roundup on a lot of things, and now that stuff can get in the water supply. This is not good. Yes, Bayer's gonna have to do something. Bayer owns a lot of things. Monsanto is one. I don't know if they'll offload Monsanto, but Bayer is gonna have to do something because Monsanto is gonna become an anchor on their stock price.
Hmm. Yeah, and one of the interesting things about this is that back in the day when before super soakers and those type of advanced water pistols came out, a lot of poor people used to use these spray bottles
Mhm.
as water guns,
Yep.
and they didn't wash them out correctly. Because I know I got sprayed in the eye a couple of times, and I was like, man, that's not water, that's bleach. So there was times when cats used to, urinate in these bottles and use them as super soakers too. But my point in saying this is that I, how many people, how
Yeah,
many people
people.
actually use these old bottles in the summertime in the '80s or the '90s to actually as water guns, and
Mhm.
poor people because they didn't know any better. There was no warning on there saying you couldn't use it for anything other than if the bottle was empty, the bottle was empty. You just assumed that it was okay. So
Right.
we don't know how this affected a lot of poor people in the summertime.
Yeah, and I know what you're talking about because I've seen that. Because the smell wasn't pungent or anything, but the smell in my mind, I'm thinking, okay, this don't smell too kosher to me. But yeah, I know what you're saying. Um, and them bottles just like on the side of roads and just everywhere.
Right, not properly recycled either because most people put those just in the trash. They didn't put them in any recycling bins.
Right.
So people
Yeah.
who pick the trash up, they ended up coming in contact with that stuff. All those juices that come out of the trash truck after it crushes everything,
Hmm.
that stuff gets leaked right back onto the ground where people live at. So,
Yeah. And then your dogs and animals, walking on the ground, dragging to the house. Yeah. It's a whole thing to this. So, like I said, Bear gonna have to do something because Monsanto is becoming an anchor on their stock price.
hmm. All right, let me get to the next article. This one is from SeekingAlpha.com. General Electric fallen to rock bottom prices. 2019 is shaping to be a very interesting year for General Electric and the company's shareholders, according to a presentation released by the management team at the conglomerate. It looks as though the year will be more difficult than many, or this year will be more difficult than many anticipated. But while this should prove to be a year of pain for investors, the business is taking the steps it deems necessary in order to turn the ship around. Assuming assuming management's my screen is pretty dirty here. Assuming management's rather thorough accounting for the troubles of the company are accurate, this suggests that the investors hoping to make a nice return on the firm in the near term may be left waiting for a while. But for those who fashioned themselves long-term investors by nature, the picture looks set to only get better after this year. So GE has been selling off a lot of assets in the last maybe year and a half. I know they're a part of the IoT. They have their own IoT platform as well, and I think that's even up for sale as well.
Yeah, something's going on because I remember during the 2008 recession, GE had problems too. The things that affected GE, and they were the world's biggest company or America's biggest company, one of those. So, which means they had a lot of overhead, a lot of overhead. And
Hmm.
now with these new technologies coming out that are disruptors, they can't justify a lot of that overhead. I don't know if they kept a lot of overhead, but the things GE are invested in, I think the running notion is they are in the business of buying companies or investing in companies. But they have a lot of different companies, much kind of like Amazon, how they do different things, but seemingly these different areas don't have anything to do with each other. But GE is like that, and they have a lot of overhead. And now, since 2008, 10 years ago, since their recession, a lot of these companies that came out are, like I said a few seconds ago, are disruptors, meaning they can do the same thing GE is invested in, but for a much lesser cost. And not only for a much lesser cost, but more efficiently also. So GE is, you can say, archaic. They're a big company. They're hard to turn. They're not agile. So kudos to them for trying to get into IoT and foreseeing the future with this technology. But since you said their IoT department is up for sale also, and that's a future technology, meaning they don't have enough money to invest continuously into that future technology. And since they have been selling off assets for a little while now, means GE is in big trouble. They have to do something. Either the current CEO is not doing his job and being innovative and turning the company around, much like I forgot the guy's name that's the CEO of Microsoft right now, what he's done with Microsoft. So either they have to get a new CEO to turn the boat around, or it's lights out.
Hmm.
What's
Yeah,
going
and
on, Dollar Will?
hey, what's going on, Don? Yeah, the summary basically says that continued weakness in power and renewable energy will negatively affect the firm, and aviation's bottom line should flatline. So they haven't been growing in the sectors that they were dominant in, 20, 30 years ago. I think that's because there's been a slowdown in the economy. People, companies are not really relying on their licensed technologies to actually use, because GE makes engines for planes too,
Hmm.
right? So they're involved in a lot. They got their hands on a lot of pies, but nobody's really eating those pies anymore. So.
Right, and Microsoft CEO is Satya Nadella. He's been the CEO since 2014, and those two, and back to GE, those two businesses that GE is investing into energy. Now we've been talking about renewable energy for so long, and we've been not only we've been talking about renewable
If
energies.
you guys can hear me, I'm having some problems now.
Oh,
That's
what's
why
going
I
on,
keep
Dollar? Well,
dropping
we
in
can
and
hear you
out.
very well. How you
Um,
doing today?
get it worked out.
All right. But not only have we been talking about these renewable energies, but the cost to get in to build an infrastructure with these renewable energies is getting less and less. So that profit margin for GE in providing energy is shrinking more and more. That piece of the pie is getting smaller and smaller and smaller. On top of that, you mentioned um not aerospace. For some reason aerospace want to pop up in my mind, but what did you say?
Renewables.
Huh?
Renewables.
No, it was like some deal with engines and
Oh,
space.
they make plane engines.
Yeah, plane engines. That's another sector that's starting to get disrupted. Plane engines and providing parts to other people.
Hmm.
I would say that piece of the pie is still pretty meaty, but they don't want to turn to another Apple where 60 to 70% of your revenue comes from one thing or a few things, and those few things is starting to get ate up by other smaller entities. So like I said, GE, they have to get a CEO like Satya Nadella that'll turn that boat around, or else, like I said, it's lights out.
Hmm. Hey, what's going on, Preem?
Hola, ¿cómo estás?
Okay. Yeah, so I don't know if Dollar will agree, disagree with or
He's not here.
oh, he said he okay, keep dropping now. I don't know.
All right, this next one is from CNNBusiness.com. Businesses are getting nervous, and that could make a recession a reality. The economy is starting back, way back. That's the message in the near stall out job growth last month. Job creation probably isn't as bad as February's disappointing numbers suggest. Usually, poor weather played a role in limiting job growth to just 20,000, but it is weaker than just a few months ago. Businesses are nervous, and sentiment is at risk of breaking if anything goes wrong. And plenty can go wrong. A session could materialize swiftly if businesses lose faith, and there's a good chance they will. Um, while businesses aren't running for the bunkers just yet, there's a trade war threatening to escalate, and government budget and debt battles are looming. There is growing sense that there's a growing sense that our economy is faltering, while its fate is in the hands of a dysfunctional president and Congress. It is increasingly difficult to keep faith that the long-running economic expansion has much longer to run. Businesses are struggling to find qualified workers to fill the record number of job openings. Sales aren't as strong as they were, but executives are loath to stop hiring. They fear if sales revive, they'll be caught. They were caught short without the workers they need. It may be surprising that the economy is having trouble of any kind. After all, President Trump and Republican Congress passed massive tax cuts and big increase in government spending about a year ago. The tax cuts juiced growth, but only temporarily. The sugar rush from the tax windfall peaked just about peaked just spring. Sorry about that. My screen is really dirty. But the tax windfall peaked last spring when analyzed real GDP spread higher. Growth has since faded, and the economy has come to a near standstill. Standstill. Retailing has faltered. Housing has flatlined, and the trade deficit has ballooned. So, based on all of these indicators, I don't know if I think there's going to be a bubble pop at the end of the year. If that's according to the fundamentals of the article. What do you think about this, Oliver?
I say it depends on what they define as bubble pop. And I'm the in-house bear. Okay, and my position is that the downturn has resumed according to schedule. That the high of October was the beginning of the downturn, and today resumed it. So the little run we had from Christmas up until yesterday, that was the end of the Santa Claus rally. That's a nice healthy run in a bear market. To go, what is that from? So what are we talking? January, February, to get a 3-month run up in a bear market.
Mm-hmm.
You can't, but the thing about it, if you're not a chart watcher, time can confuse you because the market is going well for 3 months. If you're not watching the chart and you have some kind of theory like Elliott wave theory or something like that to kind of guide you to what's happening. If you're not watching price levels or seeing if we make a higher high, that 3-month uptrend can lull people into a false sense of security. That's why you have to learn how to watch the charts. You have to actually look at the chart and let that guide your opinion over and above what people are saying in the news. So what, from a technical point, what everyone is looking at is to see if the price can stay above the Christmas low. As long as we can stay above the Christmas low, then the people on the bullish side making the bullish argument, they have a right to be optimistic. Until we make a lower low, my argument, they can refute my argument. But when we make a lower low, then they must become bearish. So that's what everybody's looking at now. Just what's going to catch this? Will we go below that low in October? Because I'm in December, Christmas, because it's crucial for the bullish sentiment that we remain above that low. That's the line in the sand.
So Royalty is asking, will the next recession be worse than 2008? My
Yes. This would be worse than anything anybody alive has experienced.
Yeah, it'd be cataclysmic.
Yeah. Yeah. You know, just we're all grown folks, you know. I mean, actually, saying that it's cataclysmic is actually healthy because it takes your mind to a practical point of, okay, what can we do constructively? And we always talk about answers on this show. You know, there's no time to be panicking. There's nothing healthy about that. You got, you know, a lot of you guys got families and stuff depending on you. So, you know, you have to be calm in the saddle. And so there are always other places to invest. It's not that most everything is going down, but there are some places that, you know, that seem to be safe to hide out, and we'll talk about that later. So
I've got a question. What are the fundamentals that he cited in the article that lead him to that conclusion?
Well, the fundamentals that he was discussing was was everything that he named in that one paragraph. You have, you know, a lot of vacant positions that can't be filled
because everybody's working.
Well, not everybody's working. Roles that need to be fulfilled are not being. There's not enough qualified candidates.
Correct.
And automation coming in and consuming a lot of those previous legacy roles. And then you factor in. And then you factor in retail is tanking all over the country. It's tanking everywhere.
It's being moved.
Malls closing down. Things being consumed. Slow sales and things of that nature are forcing retail to close. And then you factor in the China America economics war that's causing a lot of these slowdowns as well. That's not going to prove well going forward.
The one thing that wouldn't be hyperbolic and that would actually be like, okay, let me dig deeper into this, because I mean it's important that people know when they see these things or read these articles. But I gotta give CNN a shout out, because at the very top they said editor's note: Mark Zandi is the chief economist of Moody's Analytics. He was an advisor to John McCain's 2008 presidential campaign and supported Hillary Clinton in the 2006 presidential campaign. The opinions expressed in this commentary are his own. So if you're low information, you take this as God. If you're kind of a little geeked out and you kind of do this, you know, watch this stuff and you subscribe to certain things, you get information coming from everywhere. From this guy over here, from this gal over here, from this guy over here. And then if you're aware, you're able to kind of create your own, come to your own conclusion without defaulting to the gods to tell you what to think or how to think. But I digress. What I found kind of, I wish, I was like, oh man, I wish, was when he talked about sales. He said sales are down, but I didn't see any links in there. Like he didn't put any links to go ahead and substantiate that, which is an important indicator.
You don't need links. You don't need links. You look at the technical analysis for that.
Well, no. He's got links for other things. Again, I asked about what are his indicators that drew him to that conclusion. You said this, and that. He's got a link for the federal budget deficit. We've all known that. That's the U.S. That's been for the last, 20 years, if at least minimum. You know what I'm saying? Company, online survey of businesses. I mean, it's a survey. So just give me something substantial.
Can I give you one substantial? I don't know what he said, but we talked about it on the show.
If it's in this article, please.
No, I don't know. I don't know what he wrote in this article, but I'm just saying outside of the article, I can give you something. I mean, I don't want to change the. If you want to focus on the article, okay, I'll hold it.
You don't have to focus. You don't have to focus on the article, because the article is pointing to a bigger picture. And I think that's what all the world's trying to go to.
Let me just say this: if this guy's going to put this out here and come to this conclusion, I'm not he should have the evidence in here. He shouldn't just have a bunch of hyperbolic statements with no evidence to substantiate his claim, and then leave it to people to just guess or be like, well, I guess, he must be smarter than me. He knows it. I'm like, dude, if you took the time to go ahead and make these claims, show me your evidence. It's not there. Let me just say this one thing, and I'll go ahead and mute. The whole thing about the jobs, it's like that shit right there. It's like it's like a duh to me. It really is. So he's saying companies can't find employees. I know that. I see help wanted signs all over the place. I see help wanted signs for minimum wage jobs all over the place. Okay, driving down the street, all over the place, there are help wanted signs. Minimum wage, starting wage, $15, $10, whatever. Everybody's trying to find help, and they can't find help with people because everybody's freaking working. And I'm going to say this, I lied. I'm going to say this one other point. As far as the retail is dying, yeah, people are still buying. People are still, you got record, people are still buying. It's just the sales are being moved to a different platform. And I'll mute.
Well, no, you don't have to mute. I wanted to ask you a question. Let's see. Christmas is widely understood to be the most prosperous time, say, in the retail sector, right, Preem?
Millennials don't have families.
What does that got to do with my question?
Because that's why people buy during Christmas. People buy during Christmas traditionally. Times have, these are trends. Times have changed. Christmas, you are going to see Valentine's Day sales.
Okay. Let me rephrase. Let me clarify the question. There are 12 months in the year.
Mm-hmm.
One of them is in December,
mm-hmm.
and historically, that month is the most prosperous. If that's not the most prosperous, because you're saying millennials, you tell me what is the most prosperous now.
It's dispersed now. You have to factor that in.
What data do you have to prove that point of view?
Common sense, bro. Look around.
Okay. All right, I'll pass.
That's all I do.
Hey, Dollar Will, what did you think about what I said about GE?
I had to restart my computer, but tell me this. See, I'm confused about GE in terms of, I don't even know what they are. They're in so many things. I mean, I didn't want to go back to that article, take you off schedule, but I needed to go to a bar chart or something and click on profile to read a description of what they do.
GE is actually trying to be like, they're trying to have, as we said earlier, they're trying to have their hands as many pies as possible. And the problem is that those pies are actually not being touched by other businesses that depend upon them. So GE makes engines for planes. They are involved in locomotive. They are involved in the energy sector. They're involved in the military industrial complexes as well. I didn't know that they make guns and stuff like that. So they're involved in a lot of those areas. The problem is that they're spread too thin.
Right. They have
300,000 employees worldwide.
See, in a situation like that, where they have their hands in a whole lot of different pies, like one part of their business, like the guns, not necessarily, and you said energy for another. Those areas might not be hurt as much, whereas some of the other areas like building engines and turbines and stuff like that, that might be hurt. So really, in a case like this is where I think technical analysis is strong, because you get to look at the chart to see what the market's opinion of it is, not through articles, but real money. How does the investing world regard that stock as the market is going down? So that's what I would do regarding GE. I would look at it in terms of over the next few weeks, or month, see how it responds relative to the S&P 500.
Yeah, they're also involved in healthcare. So they're spread really, really thin. And now they're getting into the autonomous vehicle and IoT market. So drones as well. They have a lot of patents. I mean, I met I met somebody from GE a couple months ago at a IoT meeting, and that was highly discussed. GE wants to be the jack of all trades, basically.
Yeah, that's sort of kind of what the concept of spreading it around a little bit. That's why Amazon is into the food airspace now, because they know that retail is going to be punished heavily, and Amazon had to do something. So hey, food and products. You know, I mean, they're trying to protect money, you know, protect their assets.
So, like for example, and I know you guys want to move on real quick. When you're looking at these traditional indicators, I know this isn't one, but I'll just use this as an example that ties into the whole millennial or generational thing. Is that we do a shit ton of business with interior designers, and event planners, and one of their revenue streams that has completely gone off a cliff are weddings. Yeah, people still get married, but definitely not at the clip that they were. So if weddings were to be the traditional indicator as Christmas was, people will look at the wedding activity or the lack thereof and be like, oh my God, shit is messed up. No, people, this generation or generation, people just aren't, and even the Generation X's, like they just aren't getting, a greater majority of them just aren't getting married as they used to be. So looking at those traditional things, you have to take certain factors, you know, and relate. People are still spending money, but maybe not at that time. And again, it's being spread out and it's spent differently. But people are still spending money.
I'm just gonna say this. The reason why I brought up Christmas is that it is historically the most profitable time of the year. Companies make their retailers make enough money during that season to basically keep the stores open for the rest of the year. Yep. You cannot. No one segment of the economy or of the marketplace, whether you want to say millennials, none of them are that important to change that dominant trend. Okay. Hold on. I just want to make that point. I do not want to debate this point because I'm not going to debate this. Okay. It's just what it is. Now you can believe whatever you like, but this is what it is. Okay. So when Christmas is not as profitable as it has been, and that was one huge red flag. Okay. So that is a sign that the economy is slowing down. Now, a lot of this federal data we get, there was one, was it PMI data? I think it came out today. All the data is coming out saying that the economy is slowing down. China even issued data showing that the global economy is slowing down. Okay, it's just a normal thing. It doesn't matter that everybody has a job and everybody's going to work. It's not one of those kinds of things that if everybody just works hard. Let me just finish my point.
Go ahead.
One of those kind of things that if everybody just works hard and keeps working, that we can just power right through it. No, cycles are a natural, normal part of life. You have an ebb and flow between a buildup of supply, and then when you get to the point of oversupply, which is where we are with energy, metals, and aluminum, hence the Trump tariffs.
Okay, look. Let me just go and get this in, Mike. I just need 10 seconds. When you go a little bit deeper, and you actually go a little deeper to the retailers, the people who are buying, selling, marketing, all this stuff. What has happened? That dog doesn't hunt no more. The profit dog, and this is one of the challenges that's happening to people who sell during those times, during those seasons. Consumers are trained to wait until they used to wait until Black Friday. Now they know it's Monday. Now they know it's another day, 2 weeks out, this, that, and whatever. So companies that used to be profitable around that time and make up all those things, they're really. The consumer knows how to chase them around and how to get the better deal and better bargain. And what's happening, the rock and the hard place that the retailers and merchandisers and service providers are between right now is like, God damn, We used to make a lot of money now, but now it's like we can't even. We're selling at a loss, damn near, and they are because the consumer who is empowered, who has a knowledge, he knows how to scrape all the data, find who has the best value, and is not. And these companies just aren't making the type of margin during Christmas time that they used to make because people don't have to stand outside of stores. They can be in their home with their feet up on top of the desk with a smartphone and figure out how to get the best value on these 8 or 10 products that I need to go ahead and get. And what retailers are figuring out is they can't play that game much longer. It's not working anymore.
All
Yeah,
right, we need to go on to the next article.
Mike, let me just say one thing. Then we won't have to revisit. I will exempt myself from this line of debate because, as I've made very clear, I am a technical purist. So that means by my own admission, I go way overboard with the technical. My official answer as to why the markets is falling is I don't care. That's the technical trader's point of view. I do not care. All I do is I judge from the charts that the momentum is slowing down, and the path of least resistance is down. Now, what happens is over the months,
it's not down. It's not that, Will. And I have to interrupt you. No, let me finish.
Preem, can you mute up and let me finish? Can you let me finish? Have some self-control, brother. And I'm done with this after this. What usually happens is the federal government issues data, irrefutable data over the months to tell you all of the things that you're asking, Preem. Your questions are valid. These are valid questions.
No.
Let me finish. Let me finish. Please let me finish. Will you let me finish? Your questions are valid and typical questions for fundamental. I need you to listen to me.
I've got answers. I don't have questions.
I didn't ask you a question. I'm just need you to listen. I need you not to concentrate on talking, but listening. These are common questions of fundamental type investors or fundamental type thinkers, which you're a businessman, and that's the common way, right way for you to think. The person who can answer your question, your valid questions best, are people like Paul and anti-gravity. But no, thank you for allowing me to finish.
Stop. Okay, Mike, please.
No, we're already 20 minutes behind.
Yes, sir.
All right, next one is from NBCnews.com. The real college crisis: student debt drags down economy. The college admission scandal may have driven the conversation about higher education this week, but away from the headlines, the far bigger story is student loan debt and what it is doing to a generation of Americans. For a large group of young people, many so-called millennials, the desire to attend the best possible school, combined with spiraling college costs, may be fundamentally altering the economy in the next era of American politics. Consider a recent analysis from staff at the Federal Reserve. It found that the average student loan debt held by those in the 24 to 32-year-old age group doubled from $5,000 to $10,000 between 2005 and 2014. And that same report found that home ownership fell 9% percentage points in that same time period for those in that age group. Home ownership fell across all age groups by about 4 percentage points, but the millennial drop was much steeper. You can see the impact of student loan debt on millennials when you compare their financial liabilities to other generations. On average, millennials age 18 to 34 carry about $36,000 in debt, according to a 2018 study by Northwestern Mutual Life. That looks very similar to the numbers for Generation X, who carry $39,000 in debt on average, and baby boomers who hold about $36,000 in debt, according to the study. But the numbers look very different in that study when you break it down to categories. The largest source of debt for Gen Xers and baby boomers is their mortgages, which clock in 32% and 25% respectively for those age groups. The biggest source of debt for millennials, personal education loans at 21%. Those numbers raise some serious issues. Millennials have almost the same amount of debt in dollar terms as their older generational counterparts, but their debt is primarily going to pay off something they have already acquired, their education. The net impact is not only a drag in their personal financial situation, but it's also a drag on the economy as a whole. It means millions of young Americans have less money to spend on the goods and services, and particularly on big ticket items like homes and cars that are the backbone of the economy. The point here is not all the student debt is bad. Education in general is an investment that pays off over time. But the broader question is whether skyrocketing college costs and the student loans that have followed are increasing debt amounts to unhealthy levels for the next generation. And ultimately, there may be political ramifications to all these data points. In the latest NBC News Wall Street Journal poll, we asked about how respondents felt about the word socialism. The only age group where majority did not hold a negative view about the word was the millennial group, 18 to 34 years old. So this chart just shows 18 to 34, 38%, 35 to 49, 51%, 50 to 64 is 58%, 65 plus is 55%. So
That's funny.
yeah.
I'm sorry. What's funny about that is the 65 plus age group. When they were 35 to 50, I bet they had a even higher percentage. That's a Social Security generation. Of course, they like socialism. Of course, that number would be lower than as opposed to the highest number because they're currently receiving the benefits.
Mm-hmm. What's your take on this, Dollar so far?
I think it makes great sense. I mean, you can't. The housing is so important to the economy. So when you buy a house, everybody that's bought a house, no, they spend weekends at Home Depot and Lowe's. You're not going anywhere for a while. There's always something to fix, always something to improve. But when you have young people that don't own homes, that's a lot of money that's not going into the economy. And so they're paying student loan debt. I mean, what? How does that allow money to circulate in the society?
Right, and then you factor in that property tax actually pays for a lot of those public schools and other public infrastructure in those regarding areas. If people aren't owning homes, then there's not a lot of property tax being paid, and therefore a lot of those public pieces of infrastructure are not being subsidized either. So this is having a large ramification, which is what I was trying to say, a week or so ago on the other Brain Trust channel, that if you load up debt manufactured to these students, to this generation and the next generation, you are going to screw yourself out into a bigger recession, because if they don't have a cash reserve to tap from and they're not buying now, then the next recession is going to be cataclysmic for them, because there'll be no way for them to get out of it.
This is being far overblown. So, one, I don't understand what student loan debt has to do with socialism. They got a socialism chart at the end of it, but then they talk about student loan debt. Two, I see a number on there like 36 grand. So, I mean, again, like I said last week, cry me a fucking river. These folks are bitching and moaning about $36,000 in debt. It's not as if they were raised in the 60s and like 1 out of 4 of them is going to have to go get a gun thrown in their hand and go fight a war overseas. You know what I'm saying? This is life. I mean, and this is not fucking hard. These folks are complaining about they went to a college. They're in a country where they went to a college. They have an education. They have a degree. And their biggest problem is paying off that. That's a problem. That's a travesty for them. Not war. Not hunger, not losing your house. Okay, not losing not even losing your house, just losing equity in your house. I know people who lost over 100 grand of equity in their house, still working, but that's still money. So money is net. So I don't need all the job in this, the job in that. No, okay. So you're talking. I'm looking at 30 grand in student loan debt versus over 100 grand or 50 grand in home equity. It's still money. It's still money out the door. So these guys are griping and moaning over student loan debt. This is their Vietnam. This is their mortgage. Whatever the mortgage rollback, fallback, whatever meltdown. This is their 1970s fuel shortage. This is their World War II. This is their World War One. Their Great Depression. Fucking student loan debt. Cry me a goddamn river on this shit, man. That's all I got to say.
I know. Do you have anything you want to add to this?
Oh yeah, I would say I'm millennial too. Um, a lot of millennials who went to school and racked up this student loan debt, especially on degrees that don't pay off to pay this student loan debt. They're paying if they purchase a house, it's like they're paying two mortgages. And the type of life that we're led to want in this type of country, we can't afford it and live a social life at the same time.
Can I interrupt right quick and
You
just
have
ask
student loan debt, you have mortgage debt, you have children, you have it costs $250,000 to raise a child at least. You have car note, and you have all these other bills that you have to tack on, these petty little bills that you have to tack on. And if you're it's in document that your pay is the same as it is in the 80s, but the things that you're spending your money on are just going up, and it's not slowing down. So we're not having a lot of money left over after we pay our bills in order to have a successful life. And on top of the money we have over after we pay our bills, we're not having enough to pay down the bills that we have and the bills that we have.
I just have a quick question. What is the average monthly payment on a $39,000 student loan debt? I have no idea. I didn't go to college. I don't have student loan debt, so I don't know. Can somebody please enlighten me?
It's not student loan debt. That's $39,000. It's just that's just a rough estimate. When you start talking about Division I and Division II schools, or even Division IV schools, there are people with $100,000 in student loan debt because they ballooned up in interest. So it goes beyond their control. DE, please jump in there.
Okay.
As a baby boomer yourself.
Yep. And I can tell you right now.
I got something else until DE. Can I go? DE, when you get ready, just jump right in on me. But Mike, you said. Oh, I wanted to say that this devastation in the markets that we're looking at. It's not just stock prices. It's going to be the prices of every. And whenever I talk to, come across an economist, I ask the question, what is a, what's the word? It'll come to me. God, my mind is gone. But anyway, this downturn is healthy, actually. It's like the wildfire that cleans the floor of the forest, of the brush, the dangerous brush. Okay, so this downturn is going to lower prices, and if the millennials are invested properly, if they're listening to the brain trust, they should be. They're going to have a lot of money, and prices of everything, including homes, is going to be a whole lot cheaper. So this is exactly what the doctor orders for them. And another good thing about these downturns, they don't last that long.
We're not in a down.
It's painful. It's painful and it's steep. But even 10 years, it might go sideways a long time after it gets to the bottom. but at the end of the day, we're gonna have cheaper prices for millennials.
So
Oh man, pre man, hold on. Hey, okay. we have a big problem. It's bigger
Hello,
than.
I'm not hearing anyone.
Can you hear me, anybody?
yes, sir. DE, I can hear you.
I hear
Okay.
you, Preem.
The problem.
Can anybody else hear me?
I can hear you, Dollar Will.
Okay, can somebody else talk other than me and Preem? Because
I'm talking. I don't know if why you can't hear me.
Lionel, can you
I'm
hear us?
talking. I
I
don't
can
know
hear you
why.
all.
Okay, I
I
thought
can
I
hear
was having Facebook problem. I'm sorry.
Okay.
YouTube.
All right. Now,
Who's got the floor?
as far as the
DE or Mike? Can you hear us?
yes, as far as the student loan debt goes, um,
Mike,
you might
can you hear us?
have a guy who went to school and got a degree that really
So it should
is
be
like a degree in sociology.
Hey, D,
Or in history.
D, hold on. Hey, Dollar Will,
yes.
you can't hear D, but he's speaking right now.
No, I cannot hear him. I'm gonna drop off and restart my computer.
Okay.
All right.
Go ahead,
Okay,
D.
you might have a guy with a sociology degree, let's say. I'm not putting him down, but he's got a sociology degree or a degree in I don't know. He's studying law, you know, criminal justice.
Hmm.
He gets out of college and he might have a $40,000 debt,
Okay.
but he's making 40,000 a year,
Hmm.
right? So what is he gonna buy when say $250 is coming out of his paycheck every month for the next 5 years or 7 years? Then you have a doctor who spent $400,000 going to school. That guy graduated from school and he can't buy a house. He can't buy a car. He can't open an office. That's big money that's being taken out of the economy.
You know what?
Prim, you're cutting
I'm
me
sorry.
off, and you made your argument, and your argument is flawed, and you refuse to see that it's flawed. That's big money that's being taken out of the economy.
You know what, brother? I don't see it as flawed. It's not flawed. What you just said was atypical of what built and what made this country and what made some of the strongest generations of this country. Okay? I mean, you were talking about people who can't buy a house, but you can eat, you can work, you can live. What more do you want? I mean, just keep pushing and go ahead and just keep pressing. I mean, people who have a degree, you're saying this guy makes $40,000 a year. You're asking, I mean, only in America, not in the world, but only in America, to where somebody who makes 40 grand a year can say, cry, you can say, feel sorry for me.
But
You
you're
got,
not listening.
you have,
You're not listening.
You
The
missed
guy
the
who
point
buys
of
a
the
house. When I bought a house, when
okay,
I was working and I bought a house, my
okay,
house cost $260,000 in Florida now.
okay,
Florida,
okay.
260,000. The guys who built that house,
Hmm.
right? You know how many people built that house?
Do you,
And
do
their family. You're not listening, Green.
do
The
you
people
have
who
a car?
built that house, the people
Do
who
you,
worked at the people who worked at the companies that they bought the materials from.
do you have a car?
All those people are employed because of that house that I bought. And
Okay,
other people like me,
okay.
right?
Hmm.
Then you got a guy who's a doctor
Hmm.
who wants to live on Melbourne Beach or Coco or
Hmm.
South Beach, Miami,
Hmm.
and he wants $1 million house.
Okay.
So all of that money is helping to support a whole economy. And if that economy is not being supported because this money is being kept out of the economy, guess what's going to happen?
Whoa. The money's being kept out of the economy because people aren't buying houses.
Oh my
Housing is a huge staple on the market, and if you don't have home purchases taking place at the numbers that they need to, at the pace that they need to, then
Mike, can I be the point? Because again, for the low information or uninformed who aren't able to see this thing at the basic, simple level, a house is housing, an apartment is housing. All that falls underneath housing. You cannot convince me or anybody with a 50 IQ, which is not me, that unless a housing is a house with a mortgage, you are not contributing to this economy. Housing could be a tenement. Housing could be rent. Okay? If you own a house, it's going to a lender. Now, you draw me the map, Mike, of how, if I have a house, and I do, and everybody else does, how the mortgage we pay to that lender, that bank, Chase, whoever that we pay, how Chase is instrumental in stimulating the economy, because my mortgage shit goes directly from me to a big ass bank.
I explained it already.
So how that bank stimulates the economy, other than, let's say, if that money was to go to a landlord I was renting from, or a property management company that had a bunch of properties that they were only for a landlord, you cannot convince to an intelligent person or to the intelligent that unless you have a mortgage on your housing, the economy is not stimulated. This brother who is talking about the doctor and his house and his situation, it's all housing.
I explained it to you.
It's all housing.
I explained it.
You can't explain that in charts.
I'm gonna explain it again. I'm gonna clarify it again.
You can't explain it in charts.
I'm gonna explain it again.
But let me. I'm not finished. I'm not finished. I'm gonna finish in 10 seconds.
You cut me off.
Yes,
sir. Me off and then tell me you're not.
I apologize. I'll mute.
But bro, look, you're forgetting that Citibank is not run by computer. So when you make your payment to Citibank, the people who work at Citibank gets paid from mortgage. People pay mortgages. The attorneys that work for mortgage get paid.
Yes. Employees. Yes.
There are tons of people who get a cut out of that mortgage that you are paying.
Employees. Yes. We have a very low unemployment rate. People are working, and we can't find enough people to fill jobs.
Not only are the people who work to build your house, but the people who
or your apartment,
the mortgage company, whatever, they get paid out of that. The attorneys get paid out of that.
Or my apartment, correct? People who build my house.
You're not listening. You're not listening.
Let him talk without you interrupting.
Now let's stay out.
No, we all a part of it. Please be quiet.
I'm talking to him. I'm having a conversation with him. Please.
But Preen, you're not having a conversation. I'm talking and you're talking over me. So
go ahead, D.
Getting ridiculous. However, like Linnell saying, housing is a central part of the U.S. economy. And when housing goes down, when the economy of the U.S. goes into a tank, you have to be in Florida in order to see what goes on. I can go out on the street at 7 o'clock in the morning and drive to the beach in 15 minutes when the economy in Florida, no houses are being built. When houses are being built, it takes me half an hour to do the same drive. That's how much housing is. And even not only Florida, California. I mean, you go out, they're building houses like crazy, and housing in California costs $2, $3, $4 million. So a lot of people benefit from housing. And those people who work at Home Depot and all the other materials places that supply the housing market, they get a cut. And they buy refrigerators. They buy cars.
Supply chain.
That's my case, man.
Go right ahead, Dollar. Then we have to go on to the next article.
Okay, I just want to clarify, maybe I didn't clarify the difference between a homeowner and a renter and how they impact the economy differently. It is widely understood by everyone intelligent that the big ticket items are the things that drive the economy. And the biggest ticket items are homes and automobiles. Now, the difference between a renter and a homeowner is one, obvious, y'all touching on it, is the banking. So when you buy a house, you deal with banks, mortgage brokers, appraisers. There's so many industries involved in just purchasing the home. Okay, so that money is spread around. Not only that, apartment renters don't have the responsibility for home improvement. Okay, when you rent an apartment, usually that refrigerator, dishwasher, and those appliances like that, whatever is in the washing machine, whatever was in that apartment, that's pretty much what you go with. And that landlord is trying to run that thing till the wheels fall off. You buy a house, usually new appliances come with that. Houses are bigger than apartments, so that means that's more furniture. When you go from an apartment to a house, you end up having to buy additional furniture to fill up those extra rooms. So then there are other people in service industries like cremids that get contracted. Homeowners care about those types of things. So that's why the homeowner is going to Lowe's and Home Depot every weekend, whereas the apartment renter is not. Because the apartment renter is not responsible for the structure itself because he does not own it.
Okay, stop.
He just goes to IKEA. So we need to move on to the next article. All right, this one is from Forbes.com. How this entrepreneur created a $1.1 billion company at 22 years old. Henrique Derbergras has accomplished more in just 22 years than most entrepreneurs aspire in a lifetime. He started multiple companies, won coding competitions, attended some of the most envied learning places, started multiple companies, hired hundreds of people, and raised millions of dollars. How has he done it? What secrets to success can be shared with other entrepreneurs? I had the pleasure of interviewing Henrique Derbergras on a recent episode of Dealmakers podcast. Here's a glimpse at his story behind the scenes and his tips for raising millions of dollars, landing top-tier investors, and more. Actually, I won't actually read it because we're way behind right now. So if you want to read it, it's actually in the docket. So go ahead, have at it. All right, this one is from Bitcoinist.com. GPU miners may soon have another way to make money. As reported by TechCrunch, Vector Dash is looking to allow people with underpowered rigs not meant for gaming, such as Apple computers, talking about you, Dollarwell, to experience quality PC gaming with the help of individuals willing to rent their spare power for cloud rendering. This means that, in theory, even those with a MacBook Air could game at 4K resolution and 60 frames per second, given their internet bandwidth is capable of handling that amount of data. If this sounds too good to be true, it's not. Cloud rendering itself is nothing particularly new, so this idea is far from half-baked. Sony launched a cloud rendering service in PlayStation Now years ago, though it never really took off. Nevertheless, the company proved that cloud rendering is a viable option for gaming going forward. Vector Dash's service will apparently run users $28 a month for cloud rendering capabilities. On the other side of the deal, GPU renters stand to make about 60 cents per day, which isn't life-changing money for anyone who has the dough to throw at high-powered GPUs. However, the ability to put less than profitable meant for mining GPUs to work for another reason may be may help those who have been beaten down by both a bear market and dramatically more powerful ASIC mining rigs. The key for Vector Dash, of course, is offering payments for renters that are competitively priced with cryptocurrency mining returns, which shouldn't be too difficult. That GPU mining returns are currently negligible. This is they basically have Uber and Lyft for GPUs now. What do you think about this, Lino? Mr. Gant. Dollar Will, what do you think about this? You can use your MacBook Air for more than what it was capable of doing.
I'm all for it.
You can spend the life on that sucker. You don't have to go back into the Apple store now, hustling them down.
Okay, you sure Apple not gonna do some software update?
Well, in this regard, they're lending their resources to you at a small fee. You really can't beat that for what they're talking about doing. This is basically fractional hardware computing on the fly. This was unheard of, 20 years ago.
So physically, I get the hardware. So what's that going to do to the online mining operations?
Well, they're fractioning it all out. So basically, if they're not cracking any any numbers for for blockchain or for crypto mining, then for gaming, this actually becomes another avenue for them. So if Dollar Will wanted to play some some advanced 3D game on his MacBook that wasn't capable of doing it before, this small service would actually allow you to do that. So you're getting a whole lot of a performance that you wouldn't have had before without buying a whole new laptop.
Oh wow!
Right.
Is this a product of? Remember when when CPU started getting into took a leap up in power with the multitasking and all that stuff? Is this an outgrowth of that? Of processors getting more powerful?
I know. Go right ahead.
Well, what happened? You know how you and I say you and I, we're in the same business. You do something to have an up edge on me, so I have to retaliate. Well, not retaliate, but you can say retaliate and not only match you, but then do something that'll top what you did in order to get more customers. With crypto mining, when crypto mining first started, people mine on their computers with their CPUs. But then what happened, companies came out with these ASIC miners. ASIC means application specific integrated circuit. So with these ASIC miners, it's a piece of hardware, big piece of hardware. What they did was um, do one specific thing very, very, very well. So, and they were powerful. So what they did was they just shut out everybody that was doing mining on their computers because they couldn't keep up. Then what happened? Crypto miners stopped buying gaming GPUs to catch up. So one thing led to another. They up one group up the other group, and so forth and so forth. Now you have these plethora of very fast, very powerful GPUs, but Bitcoin is down. It costs money, electricity to mine Bitcoin and other cryptocurrencies. It's not profitable because by the time you get your piece of the pie, you don't have enough to pay your electricity bill. So now people are left with all of these GPU miners or GPU graphics cards with nothing to mine. So now they're saying, well, I spent all this money. A lot of people may not even broke even. So now they're looking for something to break even to reap their money back. So it's now they're creating industries with this computing power. So what's going to happen is, what I'm thinking of per the article is, and correct me if I'm wrong, Mike, you have all these people that were previously Bitcoin mining with these GPUs. Now they're going to create a scenario where each one can contribute their GPU power to form some type of supercomputer over like a quote unquote supercomputer for service.
Yes. Yes. Now it's become, instead of ride sharing for service like Uber, they're basically doing GPU computing for service
Right.
as a
So
service.
so now on the panel we got DE, Dollar Will, Mike, let's say the Brain Trust, and me. And we had a computer. We built a mining rig that had 7 GPUs on it. These 7 GPUs are, if you were to do everyday computing, check your email, look at some YouTube video, it's total overkill. So we bought these GPU miners. We were a team. We didn't break even. So we like, well, what can we do to break even? Now we are clicking up with other people. I may dedicate 1 GPU to something. Mike may dedicate 2 GPUs or something. And now we got a cluster of like 500,000, 700 GPUs, GPU power that's going toward some type of rendering, some type of problem solving. So that's what they're talking about.
Hmm.
I don't know if that I explained that right to people, but that's what it is.
I think I got it. I think that I know that was very helpful to me. Thank you.
Yeah. Yeah. So please, Dollar Will, don't go back to any more Apple stores because there's been a
Oh no.
yeah, there's been a posting about a Negro going into stores shaking people down, for batteries and circuit boards. So
All right. So listen. As the prices of the whole market goes down, that hardware is going to get cheaper. And the thing about Bitcoin, it's not going to always drop. So
Right.
at some point,
So
we're going to be in that ideal space where the mining hardware is going to cost less. Yeah, Bitcoin's going to be not worth anything. It's going to be expensive, but energy is also going to come down as well. So I think this quote unquote correction, there's a positive side to it. It's just painful getting to the bottom, but when we get there, it's going to be the greatest thing ever for people that have money. If you can manage to not lose money on the way down, then the world is yours.
right. So this is the time to buy these GPU graphics cards because they should. I haven't checked them. They should be cheaper because no one's buying them.
Or
So
just wait. Why what you want? Follow the technology. Keep put it on a watch list. What it is that you want, and watch the prices come down as the market destruction, and watch the Bitcoin price too. And at some point, when you get when we get close enough, and we'll kind of guide you here to let you know when the technical indicators are kind of starting to flash signs of a bottom. Then you jump in at the right time.
mhm,
well, I think what's starting to happen now is that these rigs are so powerful. You're talking about like mini data centers in people's houses now because a lot of guys went out there, they bought 2 graphics cards, 4 graphics cards, bought many different rigs. If you live in Canada or something like that, or in Greenland, that might be fine because you can kind of deal with the rising temperatures in your house. You can just in the wintertime, you can heat your house with a computer. But in places like in Florida and Texas and stuff like that, that's you're never going to make profit that way. It's just never going to work. So
Is it possible this? I know this is way a separate subject, but do those computers use so much power that that you couldn't put together like a solar energy system with a battery
you
to be able
can,
to run it?
you can, but how much is a solar panel that can push out 1,000 watts? Um, how much does that cost, right? A solar panel set up like that, it's probably you're probably not gonna break even on it unless you're thinking about 3 years, 5 years of the hardware cycle of the product itself, because every 18 months a new graphics card comes out.
So when
That's
you
how
say what's 1,000 watt, is that like more than a home or less?
each circuit on your house is 1,500 watts, right? So 15 amps times 110 volts would give you about 1,000 watts. Everybody has at least 3 circuits in their home. So
Okay, so it's
what's
about the
happening?
size of a home.
What's the size of a home?
You mean the capacity of a home? What you need to run these
Okay.
miners would be equivalent to what you would need to run a home.
Yeah, essentially, a lot of these rigs are pulling down people's circuit breakers. They're too powerful.
Mhm.
That's why you'll notice these big power supplies and that are going into these systems. These are abnormal. If you look at those power supplies, those are power supplies that really go in servers inside data centers. They really not really meant for a regular computer.
So someone out in the more rural area that's got enough space, enough land to set up a solar farm, and I know probably the average home. I know about 3 years ago, my father got a solar system in Long Island, and it cost about 25,000. That's before the rebate from
right,
the
your tax
government.
incentive. Right.
Yeah, before the tax incentive. So the retail price, unincentivized, was around 25,000. So I think that's something that cryptocurrency could pay for.
It could if the market has a bull run, but if it doesn't have a bull run,
Well, it's going to have a bull run.
And last year, we talked about a lot of mining companies that were moving to other places that would hit um, dams, hydro dams, and that had thermal heat that was coming from the earth in order to get that free energy, because they were actually first they actually went to rural areas or small towns and set up shop. And what happened, they were pulling so much electricity from the system that they were shutting down the grid because they had so many miners going at the same time. And on top of that, all those miners and ASIC miners put together created this humming sound. So they had to really set up a legitimate shop in rural areas or close to hydroelectricity in order to benefit. And also, what's going to happen is these people, these miners, they hang around certain sites or certain Reddit articles to get the word or get the information on what they need to do. What's going to happen is people are already talking, well, I'll turn my GPU off, I'll turn my ASIC miner off. And now people are saying, well, what can we do? And you get a bunch of these people together that's on these forums for most of the day. They're coming up with ideas and say, well, I know this or I know that. And they're coming up with different ideas to implement to use their computing power towards something else while the crypto market is still down. That's what's going to happen because this crypto mining isn't for everyone. Everyone that's in the crypto sphere, people that are in the crypto sphere is small already, and the people that are mining cryptos is even smaller. So they somewhat know where to go.
Mm-hmm.
So that's what's going to happen.
Yeah, absolutely. All right, let me jump to the next article. All right, this one is from CryptoBriefing.com. What is 10x? Introduction to Pay Token. 10x launched in 2015 with the promise of a digital wallet and a physical card, letting users spend cryptocurrencies to pay for goods and services. Co-founder and president Julian Hoffs stepped down on January 9th, 2019, and was replaced by CEO Toby Honich after the team of 70 failed to fulfill initial orders. Pay is the proprietary Ethereum-based ERC20 cryptocurrency token used by 10x platform. It is a security token that acts as common shares in the 10x organization. Despite missing initial shipments, 10x assured Twitter followers on January 17, 2019, that cards are being shipped. Its initial speed bump with Westcrest, the initial financial broker of the cards, was resolved, and the 10x card is now live in Singapore. 10x hopes to expand to other Asia Pacific and European markets soon, but it won't be easy. 10x isn't the only horse in the race. Crypto.com, MCO, and token, TKN, are among competitors pushing through regulation to release a cryptocurrency payment card for the consumer market. Is the 10x card too late to satisfy scorn backers and early adopters? To figure that out, we'll examine Pay, the ERC20 token issued by 10x to fund this ambitious fintech project. Without going too much into the article, Lionel, what do you know about this?
Well, yeah, 10x is that they all are being a way you can spend your crypto. They have a token which is on the Ethereum blockchain, so they're providing you a credit card. What if I don't know if it's through Visa, MasterCard, or anyone, but what tends to happen is they are Visa or MasterCard, so you are able to spend your crypto wherever these cards are located. Wherever you want to spend wherever you can spend a Visa, MasterCard, that's where you can spend your crypto. Now, this is their use case. It's not their only use case. What tends to happen is these crypto that go geared toward you paying for crypto, they are to be implemented in other systems also, and other ways you can use that token, like such as 10x. Now, what happened is it's difficult to get a provider in order to back you to get cards sent out through different countries, America, UK, Australia, because there's different rules. And what tends to happen is there's a lot of missed deadlines. This is the first. This isn't the first time 10x been through this. So that's their use case. Now, Crypto.com, I know of them. A token, I know of them. They're doing the same thing, but another company that's doing this is BitPay. They're successful, but they're not a blockchain. They're just a company that allows you to spend your crypto. But this is just another evolution of crypto for people who want to pay using their crypto. But it's just hard to get those backers because now crypto startups can't even get a loan from a bank in order to start the startup because the cryptocurrency asset market is viewed as very and extremely volatile. You have to move to places like Montana or Wyoming. I think Wyoming or Colorado, to tell you the truth, to where the laws are conducive for you to get these loans, or even move out the country to another country such as Malta. So this market is still growing. Yes, 10x tried to do this. They've been met with speed bumps. They CEO stepped down. I actually saw an interview with him. It's just hard, and the people that survive this down market and these speed bumps are really the ones that have done their job in order to survive.
Mhm. Hey, you all hit that like button in the chat, and people who are listening, please hit the like button. Now, Will, you have
Yeah.
anything?
Yeah, I just want to point out that there was another, like the first paragraph in the next section called summary. They talked about how many of the tokens are in circulation right now, and basically more than half of the total number of the tokens are already in circulation. And we're in a downturn in cryptocurrency. So whenever we start going up again, rising again in cryptocurrencies, it doesn't seem like it would be long before all of those tokens have been mined.
Right, and what tends to happen is they're released periodically. They're not all released at one time. They're released periodically. So I don't know the timeline of a lot of these cryptos, but they are released periodically.
Mm-hmm.
Have we ever had a cryptocurrency reach its full circulation?
I'm pretty sure a few have, but those are the lower tier, not the upper tier cryptos.
Okay, yeah, because I guess, again, from a technical point of view, as the supply gets low and the demand is high, what I want to, I guess I'm interested in how does that, or if that affects the price.
It should, because people speculate that about Bitcoin. The last Bitcoin is due to be mined in the year 2150, 50 or 80. But the thing is, people have been purchasing Bitcoin for years. But now, as it's getting more mainstream, there's more and more people purchasing it and hoarding it, which people speculate that, and again, people speculate that there's not too many Bitcoin that are in circulation. A lot, hundreds of thousands have been lost because people didn't think it'll get this far, and people have bought hundreds of thousands from the get go when it was $10 or a couple of dollars. So the amount of Bitcoin that are going to be in circulation in the decades to come is going to get lower and lower, which means that price is going to speculate to get jacked up, because not all millionaires in the world are able to hold one Bitcoin because the circulation is going to be that low.
All right, next article is from cryptobriefing.com. Again, breaking news. IBM signed 6 banks for Stellar-based WorldWire. Today, IBM announced the live launch of WorldWire, an ambitious initiative to revolutionize the global financial system using the Stellar blockchain. Big Blue has already received letters of intent from 6 banks to issue stable coins using IBM's international payment solution. As a respected authority in financial technology, IBM's banking clientele are spread across the globe. WorldWire's current partner institutions include Philippines-based RCBC, Brazil's Banco Bradesco, and Bank Busan of South Korea. IBM will also integrate the euro and the USD into the currency-backed token system. The stablecoin program went live Monday, though regulatory clarity is still needed for full-scale implementation. The news was originally reported by CoinDesk, but rumors of an upcoming Stellar IBM announcement has already been circulating for weeks. In an interview last month, IBM's Jesse Lund inadvertently revealed plans for a special announcement to be made with Stellar's Jed Mikalev. That section of the interview was abruptly removed at IBM's request. I remember we covered this on the Black Brain Trust. Banks will likely only use their own native stablecoins for transactions and transfers internally, much like Chase JPM Coin. To facilitate interbank transfers, IBM also plans to implement an interbank payment solution, XLM, the digital currency token of the blockchain project Stellar. Will act as a bridge currency for one bank to another. Though such an application, liquidity can flow freely both within and between banks with XLM as a medium. So what's happening now, this is actually a big threat to the European banking system of my mind just went blank. The SWIFT system. So the SWIFT system is actually the legacy system that Western powers use for bank transactions, which enables an ACH payment. An ACH payment takes 72 hours to clear. This clears almost immediately at the speed of the wire. So this is a big, powerful move that can bring just about every country online and every bank online and every person online who does banking. And you add this into digital wallets on your phone. Now you're talking about whipping out your phone or even your smartwatch for that matter, whether it's an Apple Watch or Android Pay Watch or a Fitbit. And now you're talking about paying for things in real time, across continents, in different time zones in real time, and there's no delay. This is really big. This is really huge.
Yeah.
So you're saying that the IBM has just entered the banking?
No. They leverage their context, their traditional legacy context to actually switch over to something like this. IBM's always been in the banking industry, since the time of banking in this country. But what I'm saying is that IBM has leveraged those legacy clients to switch over to this new blockchain-based solution.
Oh, okay.
Right. IBM has the infrastructure for banks to interconnect, and they're using Stellar's blockchain in order to do that. For people that don't know about Stellar's was created by a person named Jed Hoyer. Jed Hoyer is the co-founder of Ripple slash XRP. But he left Ripple slash XRP and started Stellar. They're doing the same thing, uh, uh, really the same thing. Stellar team with IBM, such as the article is saying, and what we've covered on the Black Brain Trust. So, like Mike said, IBM is leveraging their infrastructure and their APIs and their basically the whole infrastructure to bring banks online, like he said, to send transactions to each other in real time. Because with the Swift system, it takes 72 hours, and on Stellar's website, if you go to Stellar website, there's a video that says from IBM that says, "Hey, it takes currently now, you can FedEx money and send it to another country and to get there before you even get it per Swift," which is true. It takes too much. We're living in a time where we're on a cusp of 5G and it still take a long time to send money across borders. So this is going to eliminate a lot of people. IBM in this case is the middleman, which will connect these banks and these people across the world.
Yeah, I was thinking about what we were talking about in the last article, and talking about it's Bitcoin gets in another uptrend. When I see IBM and the big names of these companies moving towards cryptocurrency and not away from it, that even gives me more confidence that crypto is here. It's here to stay.
Right.
You know,
And
or at least in the midterm. Okay, it's got a use and function, and
and
and it's being adopted by big institutions and deep pockets.
right. And with per other articles, they were saying the banks that have come online are going to be using their own stablecoin. I don't know how that's going to work. These banks using their own stablecoin and transferring. I don't know how it's going to work. I need for this to play out more to understand it better. And also, IBM said that Stellar will not be the only cryptocurrency per one article. May not be the only cryptocurrency that they'll use on their systems. So that leaves it open to other cryptocurrencies to be used on about maybe six or something. I got to find an article in, but I did read that. But this is interesting. I agree with you, Dollar Will, and I agree with you, Mike.
Okay,
It's
I got a
yeah.
basic dumb question.
What's going on? Shoot, there's no
Are they,
dumb questions.
are they talking about paying their employees in cryptocurrency?
IBM.
Yeah.
Not to my knowledge. I know Walmart is the only company that I've heard of
Mm.
actually paying their their employees in fractional Bitcoin or some other form of currency payment.
Wow, we could be in a situation where the cryptocurrency rises faster than the stock.
Or they may peg their entire stock to a crypto.
And that's the tokenization of stocks, which companies are already doing. They're already tokenizing stocks.
And the benefactors to all of this will be millennials. It's just hurting for you guys right now, but you know, the sun's gonna come out.
Now,
Y'all
have you been reading my emails I've been sending out? I've been saying that a lot of institutions are saying, hey, we want to get with the changing times, and they see millennials want the option to pay in crypto. So a lot of businesses are making that happen, having that payment option available.
Yeah, your day is coming.
Mr. Preem, do you have anything you want to add to this?
Sir, no, sir.
Okay. DE?
No, not really.
All right. Yeah, Freelance Ronin's supposed to be on the panel too, but he's a little bit late to the party.
Sifu.
Mhm.
All right, next one is from ToshiTimes.com. Visa is getting into crypto. Mass adoption is coming. They they highlight that this is an uncommon opportunity to help Visa to raise the bar on delivering the convenience and security of digital currency to people all over the world. Moreover, they aren't just looking for someone to develop blockchain technology. They want a person who is passionate about the intersection of payments and cryptocurrency. Crypto is the future. The successful candidate will help Visa develop new products for Visa to deliver value to fintechs looking to support cryptocurrencies. In addition, they will manage Visa's roadmap for cryptocurrency related opportunities. The individual who is successful in getting the job will not be on their own. They will manage a crypto team and report to Visa's head of crypto. It looks like Visa are taking the threat posed by crypto seriously, rather than being relegated to the past as part of the legacy financial system. They are actively looking to develop products that utilize blockchain technology and existing cryptocurrencies. In the advert, Visa state they are making sure that Visa is the Visa is the best way to pay and be paid for everyone. I know you're gonna have to mute yourself. There's a lot of feedback coming from you. In the advert, Visa state they are making sure that Visa is the best way to pay and be paid for everyone else, for everyone everywhere. Clearly, they don't want to be left behind as the crypto world is now gathering pace. 2019 so far has been the launch of Fidelity's crypto custody service, develop development of Facebook's crypto coin, JP Morgan developing their own stable coin, Samsung integrating crypto wallet into the Galaxy X10, and IBM signing 6 banks to use Stellar's blockchain. We just covered that. As financial institutions and tech giants all rush to develop products for consumers, could 2019 be the year of the crypto mass adoption? Um, I would say so. If you don't have some form of digital asset at this point, there's no reason not to adopt it, and there's no reason not to have yourself involved in some form of blockchain or crypto technology.
Yeah, and this I have to tip my hat to Visa. A lot of times in the past, we talked about how Visa and Mastercard are obtaining patents toward cryptocurrencies, and also in the past, we talked about the likes of Radio Shack and Circuit City biting the dust because did not they did not innovate with the times. What Visa is doing, and the reason why I tip my hat off to Visa is they know this new technology is very hard to learn for some people. It's a learning curve. People are not, it's already, when you look at the news, people poo-poo and downplay crypto and how it's too volatile, which I have another thought on that, and how blockchain is in a saturated ledger or so forth. So you're getting these conflicting thoughts from people that you may listen to. So what Visa is doing is they open up their own blockchain arm of their industry, and now they are capitalizing on that shortage of knowledge and becoming a middleman for other entities to use their services in order to integrate blockchain or cryptocurrency payments. So it's like Visa is already a service for you to accept payments and send payments and so forth. They're changing with the times. They know that this is going to be new. It's going to be on the horizon. It's at some point is going to eclipse what Visa transactions per seconds, which is about 30,000. At some point, it's going to upgrade to that. So what Visa is doing is they're hopping on this bandwagon soon, creating products for other companies can use in order to stay relevant. That's what you do in business.
Right. I mean, they're in the credit business. They Visa should not be concerned about the currency. Their business is credit.
Right. And
So they should be doing business in all currencies.
right. And people are not going to hold wallets. People have been trained to have a bank hold your money for hundreds of years. That's not going to change overnight. Only a very small number of people are going to hold wallets or take control of their own currency. So now you have these custody solutions coming out, such as Fidelity, and now people are going to trust these custody solutions and these banks and Visa in order to do the work behind the scenes. So they're going to stay relevant. And that's what they're doing now. They're staying relevant. That's what they're supposed to do.
So instead of, or in addition to Apple Pay and other digital, apps on the phone that allow us to do transactions, I mean, is there, and why isn't there a Visa, electronic form of Visa?
It may not be one now, but that's not to say it will not be one in the future.
If they're going to be around, they're going to have to become as easy as PayPal and Apple Pay. It should just be an app on the phone.
They already. Well, keep in mind that Visa and Mastercard are just networks. They're not exactly the they're not. There's no Visa store or Mastercard store. They're just a network. So they're infrastructure first. They're infrastructure as a service.
Well, I mean something that replaces the credit card I hold in my hand that says Visa on it. That it has to be an app on the phone that can do that same transaction. All this card swiping and all of that. I mean, why? Because if people can go with their phone and bring up other digital methods of payment, Visa and Mastercard are going to have to become that easy.
Well, the thing is, the phone itself will be your card. It wouldn't really have so much to do with Visa or Mastercard or American Express. It's more those are the infrastructure services that they provide. The phone itself will be your card. I think we covered an article maybe a couple of weeks ago that talked about moving into that realm, right? Going to a more biometric style of payment. So it's going to go beyond just a physical card. The card now is the only mechanism because there's no way for
okay, make it plain for me. When you say biometric payment, what break it down?
Biometric payment means either using your fingerprint or some form of your retina. You can pay with your eyes.
There you go. If I see it, I can get it.
Yeah. Can you imagine Dollar Will coming into a store and just looking at everything, and next thing you know, he's breaking up a whole lot of things into his cart? This is the path that Amazon is going with their cashless stores, right? No cashier there, just basically walk in and just pay for stuff without actually going to a checkout line. This is the path that they're going on, and many retail stores and many operations are moving in this direction. I can't wait till my barber, just accepts the fact that I'm not going to pull out any cash and pay him. Just the factor of me touching my phone to his, or just for that matter of me just going home and leaving the barbershop. I don't have to go to an ATM and actually pull out $20 from one of these ghetto ATMs that charge me like $10 just to pull out $20.
Yeah, I do that with my barber. My barber's a female. For people who don't know, I cash shop her.
You let the matriarch cut you here?
Yeah, man. She been my barber for about 5+ years. Yeah, but I just cash shop her.
Did she give you a mohawk too?
Can I ask
a quick
bro?
Can I
a
quick question
in the chair
about the barber, because I noticed that my barber does this. He actually moves over the transaction fee over to me. Do most people mind that? I mean, it's a nominal thing. It's like 3% or whatever. Do folks mind that?
How much you pay for a haircut?
Here about $30.
You might want to think about going for a baldy.
And that's only because I have a goatee.
You might want to think about going with a baldy.
I know, right? I could do that myself. But I mean, it's like 25 for a haircut, but it's 30 if you have a goatee. So, I mean, I mean, would you guys mind if they moved that transaction fee over?
I don't. I mean, you tip your barber anyway, so I think that's added in with the gratuity. So
Okay.
I don't see. De, you have anything you want to add to this?
No, this is my learning curve here, man.
That's fine. That's fine. That's fine. All right, let me get to this next.
But I mean, on this visa thing, I did want to add a couple points. One, I think it's actually for them to go ahead and do an alliance with the whole crypto market thing is smart because again, like Dollar said, they are in the lending business. So if they're going to throw some coin over a year to the sector to see if there's any type of viability to it, if it's going to last long, it just plays smart. Two, um, it would be ignorant um, on them to actually, well, to the folks. One of the problems that I see in the folks who are in the crypto market is they don't know how to sell it, okay? Because they don't know how to sell. So what I often see is their motto is, if you don't get it, you're a Luddite or you're ignorant. It's like, no, just make it plain. They don't understand that if you're in business, if you have a product, service, or whatever, you have a responsibility to denominate your value to the market, to the customer. You can't depend on the customer to go ahead and do their research to kind of be like, you have to figure out why I'm worthy of you giving me your money. That's ass backwards. So with someone like Visa, what do they call it, like a legacy company coming in, that will kind of maybe help these guys. I mean, because they might not get it. They may be stuck on stupid and be like, "We're not moving. We just believe this." But Visa may, be that bridge because they have the branding and they may have the way to go ahead and let them know, "Hey, listen, I know what you guys are doing are futuristic, but you have to kind of ABC this stuff or actually make it plain or sell it to the marketplace." That's 2, 3. I already mentioned that they went ahead and placed a bet, and oh, and if their play, if Visa, Mastercard, whoever the bigger players are, Chase, JB Morgan, whoever plays in this Bitcoin crypto market, I foresee their play being something that's evergreen and not tied to hardware because their play should be in something that if it does fail, they will learn a lesson or they can move it on to something else and not be locked down either in a coin or in a phone in something heavy that they just can't shit can should it not work out for them.
All right, we need to move on to the next article. This one is from the NewYorkPost.com. More than a third of New Yorkers say they can't afford to live here. That's why Paul Bryan is not on the chat. Can't afford to be here either. At least it will be easier to find a seat on the subway. More than a third of all city residents say they can't afford to live anywhere in the state, much less the Big Apple, and believe economic hardship will send them packing in 5 years or less, according to a dismal new poll. That's 41% of city dwellers who say they can't cope with New York's high cost of living, according to Quinnipiac poll published Wednesday. Separately, 41% they'll be forced to pull up stakes and seek greener pastures where economic climate is more welcoming. They are making the city a city for the wealthy, and they are really choking out the middle class, said Ari Bertrand, a 49-year-old paralegal and born and bred New Yorker from Forest Hills, Queens. Quote, a lot of my friends have had to move to Florida, Texas, Oregon. You go to your local shop and it's $5 for a gallon of milk and $13 for shampoo. Do you know how much a 1 bedroom, 1 bathroom apartment is? $1,700. What's wrong with this picture? And New Yorkers collective outlook seems to be getting worse. Just 31% said they thought they'd have to leave when the pollsters asked them the same question in May. City dwellers were not surprised their neighbors have such a bleak outlook. At the Mutual D. Who've already made a break for it out of the Empire State say they are not looking back. I don't want to read too much of this because this is it's sad to hear that these people are being squeezed out of their squeezed out of their place of living unfairly. $13 for shampoo. Maybe you might just want to let your hair get nappy. If it was me. Who's from New York on this panel? Dollar Will, your peoples are from live up in New York. What do you think?
Let me see. First, yeah, I have lots of family there. I was born there. But I could just as well speak this story from the DC perspective. It's expensive there. Gentrification is driving people out. My view is somewhat controversial on this topic.
Gentrification? Gentrification.
Yeah.
What is that?
What's your question?
What is gentrification?
In short, whites returning to the city. Now, my position on the gentrification issue, my only concern is that people are being moved out or forced out through illegal means. The fact that an area costs too much for people to live in a particular area, I don't see that as anything sinister. Okay, we have their change is constant. You can't stop change. You're talking places like New York and DC where the real estate values have gone through the roof, and you have people that don't make the income to stay there that are property owners, and even the property owners, they don't want to sell. They're really fighting to keep things the same, and you can't fight to keep things the same. The best possible thing happened. They bought property, it appreciated, and they get this property that they may have purchased for far less than $100,000. I know in DC, when you're talking about somebody that's say maybe 70 years old, they might have bought their property for 10 or 15,000, and now that property is selling for 600 or 700,000, and they're attached to the property. But the best thing to do is sell. We can't afford to stay there, but they're what's the saying? Cash poor and house rich. They're struggling every week, but if they sold their house, they would have $600,000 or more. And when I say to them, why don't you sell your house? Their reaction is, where am I going to live? I say, move.
It's an emotional response.
Why would they have to sell their house?
Because so many things are expensive there, and you have people on Social Security, which is of course not a lot of money, and their house is paid off, so they either have to get some type of a loan, an equity loan, or they could sell their house. But it's like we we will be cash poor and house rich. We will live in a $600,000 and $700,000 house and not have money to live comfortably. We'd rather do that than sell and move south. Move to another. Now I'm not trying to be insensitive to the people who don't own property. I'm just talking about there are people complaining about gentrification issues who are property owners. They're sitting on an equity in excess of a $500,000, and it's a struggle for them to afford living in that city.
I think just to get on a train in New York, it's like $8 or something like that one way in some of those places. It's ridiculous.
Yeah, and when your house goes up to be $600,000 and $700,000, just stop and ponder the property tax bill. My father lives in Long Island, and he pays about $12,000, and that's a lot of money for property tax.
Yeah. I think I read an article to where Alexandria Ocasio-Cortez's mother moved from New York to Florida because she was paying $10,000 in New York and she's only paying $600 in Florida. So she had to get the hell up out of there. But what is it important? My not knowing, because I'm not from there and I'm finding this out, is what is it that causes prices like milk, gas, and things to rise above the national average or beyond the national average in these pockets? Is it people moving in? Is it jobs moving in? Companies, rich people knocking down things, building up? What is it that's causing all the not of the real estate, because the real estate benefits the legacy people who've been there, but of just like the basic needs that you need, like Mike said, the subway, milk, food. What causes all that stuff to go up?
New York City.
A lot of things that cause the prices to go up. One of it is wages. First of all, is wages, because the price of your apartment or your house, the cost of your mortgage or your house, is a certain level, and you have to have that income to afford it. If you can, if you're making $5 an hour, when you were making $5 an hour and a gallon of milk was 50 cents, okay, but now you can't make $5 an hour and a gallon of milk is $2. So you have to have increase in wages. Then the cost of like everything else, the gas, it just is just a creep in everything. The price of everything goes up. So of course the guy who's selling milk gonna raise the price of his milk. Plus he's gotta bring milk. Now you don't have milk farms in New York City. So your milk might come from Pennsylvania or somewhere the distance.
Vermont.
So the cost of transportation also going to add in. There's a lot of things that go into the cost in New York City, but the biggest cost in New York City is where to rent the space that you're going to put your business.
Well,
and that cost gets passed to the consumer. It's a big snowball. Everybody, this is how inflation works. Everybody passes the cost on to the next. That's how the system works. That's capitalism.
Good evening, gentlemen.
Hey, brother, what's going on?
I'm good.
Dollar, part of the problem in New York City with the older people who don't want to sell their property is there's a psychology attached to it, and when you make elderly people move, it kills them. My mom refused to move off the street that she'd been living on for 26 years, 25 years.
My father refuses to leave Long Island, and he's had friends leave and go south, and they love it, and he's visited them, but he won't move.
That is not the South is hot.
The South is hot.
That is not the biggest problem.
He's from the South. City. He knows it's hot. He's visited friends and stuff. He's attached to New York.
Hey, hold on. Paul Bryant has something to say. Paul Bryant, put some volume on your mic, please.
Sorry, gentlemen. Can you hear me better now?
Yes, sir.
All right. That is not the biggest problem in New York City. All right. It comes down to number one.
Hearing him.
Can you hear me?
YouTube has been kind of janky today.
Dollar Wool, you're gonna have to reboot your Dollar Wool. Can you hear me?
Yeah.
Update your browser to version 73, and then reboot.
Can you hear me now, gentlemen?
Yes, sir.
Okay. New York City, number one, is the most expensive city in America. All right. New York City is also the largest city in America. New York City is also the business capital of this entire planet. Okay. So everyone who lives here, you are literally paying for the privilege of living in the business and economic capital of the entire planet. So, New York City has the highest property values in the entire country. New York City has the highest property taxes in the entire country. Northern Long Island in Nassau County is called the Gold Coast. It has both the highest average property values and the highest property taxes in the entire country, even more so than Beverly Hills. The rents for residential and commercial are the highest in the entire country. New York City also has the highest salaries, excuse me, in the entire country to cope with living in the most expensive city in America. So you can literally do a job here in New York City that's going to pay you, for argument's sake, $90,000 per year. You can do the same exact job in, say, Mississippi or Alabama and literally make 35,000. Okay. Now, New York City, we have a problem here of space. We literally do not have the room to build out. So we build up. That's why there are so many high rises here. Now, as far as people moving out and older people not wanting to move out, that is not a huge factor and driving factor. And that's not really a huge of huge relevance to why things are so expensive here. Wall Street is located here. The Mercantile Exchange is located here. Many banks, their headquarters, they may be incorporated in the state of Delaware for tax purposes, but their headquarters are here. Wall Street is here. This is again the economic capital of the world. So to live here, you're paying for the privilege of living here. Now, I spent 5.5 years living with my second wife across the Hudson River in Jersey, and everything cost lower. I mean, from our balcony, I could see the west side of Manhattan skyline and the high rises, and everything was a lot cheaper. Everything, even living there in North Jersey, but living here in New York City, everything is expensive. Your property values are high, but the size of your home is small. So a $650,000 home here is literally going to cost you, say, 50 or 60,000 in Atlanta. Yet the house will literally be 3 to 4 times larger, and you will have 7 to 8 times as much land. Plus, you own the land here in New York City. The city owns every inch of land here, so all you own is your home. That's why we pay property taxes. It's basically rent. Okay,
Yep.
even as a homeowner, it's just called property taxes. So, uh,
DC is the same in that regard.
okay, I find that very
And,
interesting.
for the record, you can get a toilet on land in Atlanta for 50 grand. But go ahead.
Okay, so um, you know, I also want to say New York City, we also have the largest population in the entire country. There are 9.7 official full time permanent residents. Number two, I believe, is LA, which has 3.3. So it's not even close. Now, that number, permanent full time residents, those are people who live within the confines of the five boroughs that make up New York City. When you add the people who live here in New York City, they rent an apartment Monday through Friday, and Friday evening after work, they go home to the state that they call home. When you add the people who live in Long Island, who live in Connecticut, who live in New Jersey, who live as far away as Pennsylvania and South Jersey, who only come into the city for work, you have
Pennsylvania?
Yeah,
correct.
yeah. There's a connector.
Fuck.
Yeah, they have a connector that goes. I think it's the Pennsylvania, Jersey, New York connector.
Correct, correct. Mostly up in the Pocono Mountains, but some who also live in Easton and a few other cities. Again, this is New York City. This is the economic capital of the entire world. So when you add in those populations to the permanent full-time populations, Monday through Friday, you have 15 to 17 million people in this city, Monday through Friday, working plus an estimated 3 to 5 million tourists. So Monday through Friday, you have 20 to 21 million people here during the day. So there are more than enough people to accommodate the extremely high prices for the economies here. Now, getting on the subway and a bus does not cost $8 for one way ride. It costs 2.75. However, a $1 bottle of water that costs you $1 in all of the outer boroughs. If you go into Manhattan, that $1 bottle of water literally costs you 2.75 in Midtown and downtown, and 2.50 to 2.25 way uptown, Harlem, Spanish Harlem, Sugar Hill, so on and so forth. So
Mhm.
everything here is expensive. Everything here will continue to be expensive. An article was covered in the Black Brain Trust about 4 to 6 weeks ago. How in Midtown Manhattan, several stores were actually closing, including the Nike store, because they said the commercial rents were just too sky high
Mhm.
for them. Okay, and that's a multi-billion-dollar business. So, to bring it back to the main thrust of this article, I have personally been telling people since the early 2000s. I was saying in 2002 to 2003, I said, listen, within the next 5 years, if you are not making a minimum of $50,000 per year as an individual, you will not be able to live in this city. You will be struggling. So now in 2019, by my personal estimation, if you are making $50,000 per year and you're living in this city, you're still struggling. Okay. I know plenty of people who generate a six-figure income, and they're comfortable, but they're not wealthy. They're comfortable. That is how expensive it is to live here in this city. All right. And also, because of this environment, it is so easy to live far above your means. Now, that's another conversation that can go 10,000 other different ways, not necessarily germane to this conversation, but
Something happened
But
to Paul.
but hey, Paul, are you there? I want to ask him a question.
They got Paul.
I think Paul
extremely
might have dropped out.
outrageously expensive. Can you guys hear me?
You dropped out
Yes.
for a second.
I'm sorry. What I was saying is this is also the advertising capital of the world. This is also the economic capital of the world. So there are so many imp, impetuses and reasons why it is so outrageously expensive to live here in the city. And it's only going to get worse, and it's not changing. Everything is hyper expensive. It is prohibitively expensive to fix the infrastructure here. So even though the bridges and the subways are crumbling, this is still by far the most expensive city to live in this country.
Hey Paul. Hey Paul. I was gonna break this up into two parts because there's so many people on the panel, but I'm just gonna just go in and just dump it all into one. But this is a two-part question. One, how the first part is how long do you think before New York looks like San Francisco? And part two is how has the effect of the tax thing with the property taxes being deferred to the federal deduction tax that kind of got eliminated, how big of an effect will that have? Because that kind of affected not like the working class, that affected the middle and the upper class. What effect will that have on New York?
Well, number one, I don't know specifically what you mean about looking like Frisco, so we'll circle back to that in 1 second.
Yes, sir.
But what we are seeing is a lot of the white flight of the '60s and the '70s. A lot of those people have been leaving Long Island because of the extremely high property values there and moving back into the five boroughs of New York City. So that has changed the demographics. It has gentrified certain neighborhoods, especially Harlem, Williamsburg, and downtown Brooklyn. Now, with all of that said, we're still seeing nothing but luxury condos and high rises going up all around Manhattan. The prices are still sky high. The rents are still sky high. So you're all seeing so far. Even in as much as people are being forced out, you're still seeing a huge influx of people who are generating the income to pay these rents. So until that stops, this specific trend with the spiraling real estate costs, I don't see that changing any anytime soon. So
Can
now
can, can
let's because I'm not sure what you mean on that.
Yeah, can I mean, on that point, as far as the rents, I'm just gonna go ahead and just Bogart and inject the point I was trying to make earlier, as far as when folks was saying that when people buy houses to go to Home Depot, this, that, and whatever. But again, it's very, very simple. As you said, in New York, there are luxury apartments, luxury rents. Those apartments have to be outfitted with the newest contemporary modern lighting, appliances, things of that nature. Those those property management companies, those hedge funds, those REITs are still getting their things from Home Depot. So that transaction is still taking place. Whether or not I have a note, a 15, 10-year, 30-year note, 20-year note with a bank, or if it's a REIT or a management company, the economics are still happening. Okay, so to that whole argument earlier, as far as we're not, it's a mortgage or a rent. Let's look at New York.
Well,
You know,
well, the
it's
thing
it's
with that,
still affecting the economy.
yeah,
Mhm.
but people who rent are not necessarily going to Home Depot and Lowe's to outfit their home. Homeowners do that. Renters, they're going to go to IKEA.
IKEA.
Correct. They're going to go to IKEA or they're going to get something
Okay.
from Crate and Barrel.
Okay.
They're not,
Okay.
Home Depot and Lowe's are geared towards homeowners. So what affects home
Boom.
ownership will affect Home Depot and Lowe's. People
Mhm.
who rent are not necessarily going to Home Depot. And if they do go to Home Depot and Lowe's, they're not spending the money that a homeowner will. Okay. There is a reason
Mhm.
that one of the most powerful economic drivers and leading economic indicators in this country is still home ownership, not renting.
Yeah,
So
I
I
know.
don't know. I'm sorry, Mike. Go ahead.
No, I was just gonna say I know some Indians who are in IT in New York, and it's like I think it's six of them into a two-bedroom apartment in New York. So that goes to show you the cost of living in New York, and how it affects people even in the six-figure department. Your IT people who couldn't buy any property but have to kind of shack it up with each other.
Well, you know what? I'll say this. I have a, excuse me, I have a cousin. One of my cousins, she is a corporate lawyer. All right. And she was living in an apartment in Midtown, right in the heart of Midtown, and an absolute broom closet. Okay, a broom closet, and her rent was 3,500 a month. Now, again, she was a corporate lawyer, so she had the money, car service to and from the firm to her apartment. I mean, listen, my cousin makes tons of money, but still, I mean, when you see the broom closet of an apartment that this girl lived in, all right, and 3,500 a month, it's insane. All right, so more and more people are questioning, why am I paying this? Okay, so
I thought
now
they had rent control in New York, though, right?
rent control, yeah, but see, rent control are for people. Those are for people like, say, my mom's age or like my grandmother's age, people who lived in that apartment literally from the 50s or 60s or even from the 40s. So they were grandfathered in. That's what the rent control laws are.
Okay.
It's for those people.
So is it just greedy investors overcharging people?
No, bro, it's New York City. It's listen, you have to understand something. Number one, this is New York City. All right. This is the largest city in America. This is the economic capital. This is the advertising capital. This is a huge tourist attraction. And as Dollar Will has said 1,000 times, and as you'll also hear me say 1,000 times, in a given market, a competitor will price his goods and services for as high as the market will bear.
Mm.
So if competitor A lowers his prices, competitor B will not lower his prices. If competitor A raises his prices, competitor B will raise his prices. That's historically how markets work. So if you can charge a 1,000 square foot, no, that's you can if you can rent a 800 square foot, which is small, an 800 square foot apartment in Jersey for 1,200 a month, and you can rent that same apartment in, say, Queens or Brooklyn for 1,700 a month, but that same apartment in Midtown Manhattan for 4,200 a month. Guess what? If people are going to pay it, then you're going to charge 4,200 a month. It's what the market will bear. So to live here in New York City, with the attraction that this place is, for everything that it is, people who have the means will pay it.
A Black in the chat said 1700 in Brooklyn is a wet dream.
Depends. Well, if he knows about Brooklyn, it depends on where you're talking, because I've seen, like I said, downtown Brooklyn has high rises, condos going up left, front, and center. Fort Greene has been completely gentrified. So you have Fort Greene projects, which is a projects, but everything else, the rest of the neighborhood has been completely regentrified. You have Williamsburg. You have a few other areas. So you know, depends. He he is
Um,
right though.
Paul. I mean, and this is a personal opinion question. In your personal opinion, what needs to be done to make things better, and who or what could bring that about? I'm sorry. I knew it was. I'm my bad. My bad. But
The reason why I'm laughing is we're talking New York City, the Big Apple, or the Rotten Apple, as a lot of us call it. The only way to make that change is you're going to have to talk about a fundamental shift and change in the nature of what is the United States of America. There is a reason why this is the most expensive city in America. Why it's the 10th most expensive city on earth. Okay, so you're talking a fundamental shift and change on every possible level. On short of that happening, nothing is going to change. Even through recessions, things this remains the most expensive city in America. So that's not changing anytime soon.
When key condos and apartments or whatever go, I don't want to say apartments, condos and homes come on the market for sale, rich people throughout the world are competing for that property. It's not just New Yorkers. It's at the top end. New York isn't even a local market. Okay,
Correct.
people from
And
other countries come to buy New York property that they don't even ever intend to live in.
China and Russia owns a lot of property in New York.
Right.
bro, Manhattan has Manhattan over the last 12 months, three or four of the most expensive apartments in the country. Apartments. Well, I don't want to say because it's not rent. You own them, you buy them, whatever you want to call it, a condo, they're multi-level, built-in swimming pool, your own private elevator. But bro, we're talking I think 75 million, 85 million. All right, I'm gonna go on YouTube and send a few of these links through the email chain to see what I'm talking about. What Dollar Will just said is laser accurate. People. People of means all around the world, they may not even live here. They may only come to that residence, whether it's out on the island, out in the Hamptons, out in Brooklyn, or out in Midtown Manhattan, just because they have a business meeting. But they'll spend the money. I'm
Yeah,
sorry.
owning a New York product is a status symbol for the uber rich around the world. It's saying that you own some prime property in New York City.
And understand something, because most people, when they think New York, or they see New York, everything you see on TV and movies, that's Manhattan. There are five separate land masses that make up New York City. So the other four are still expensive because of the one, Manhattan. It's really Midtown and downtown, the financial district and Midtown. So everything is so expensive because of half of Manhattan. That's really what it comes down to. So a lot of people who are working class people who can't afford to live here, but it's like, hey, man, because this city is so large, it's geographically the largest city in America. Do you really want to travel an hour and a half? Some people, as I said, come as far as PA, 2 hours, just because they can't afford to live here, but they work here, highest salaries in the country.
Yeah, I think something major has to happen in order for I mean a major economic shift has to happen in order for major change to take place in New York. So I mean you're seeing the same thing in Boston too with a lot of the development here too. The same almost same thing parallel.
I'm not again. I know this is shocking to you guys. I'm the liberal Democrat, and I'm saying it's not really a problem
No, no, no. I'm saying in
because
terms of
because
in terms of the consumer can't be able to survive there. It's that becomes a problem for many of the businesses who want to find employees. They just you know.
right, right. Well, then those businesses have to. That part is corrective as well. The businesses just have to pay enough money to induce people to live there. But major cities like New York and now DC is getting that way. Chicago, certain sections of Chicago and San Francisco. These are not places for poor people or working class. Really working class people. And people that live in these spaces, and I'm including DC, because they've been there for a while, they think they have a right to be there. No, it's going to be like separate Americas. If you are a high earner, that's who's going to live in those places. And if you're doing I guess a lower level job, you're going to be paid a ridiculous amount to do that job there, because the people that's making all the money in these cities, they're gonna have to pay you enough to warrant you working there. So that part will get worked out.
You know,
Somebody's got to drive the trash truck and do all that stuff. And if the people can't afford to live there and they move, well, what's going to happen is that they're just going to increase the pay.
it's funny what Dollar Will just said, because the last time I've spoken to people, sanitation, New York City Department of Sanitation, those guys are making, I think, 75 to 80 G's per year now. NYPD, if you're a sergeant with OT, you can make over 100 a year. Teachers are now finally getting paid what they're due. They're making close to 100. Principals are making north of 100. So if you go to, say, the South, or to the Midwest, there's no way a rank and file police officer is generating a six-figure salary. There's no way a garbage man or a transit worker is making a six-figure salary, or close to it, even if they're making, say, here in New York, 60, 70, 80 a year. No way are they doing that same exact job in that part of the country. But you have to remember, your cost of living is much, much lower once you leave New York City. So they won't generate the same salary it costs to live here. The problem is, okay, fine, you are sanitation in New York City and you're making 75 per year, but you're
Hmm.
comfortable. All right.
Yeah, that's
If you're, it's if you're living in, say, Atlanta, or if you're living in North Carolina or South Carolina or Texas, you're making 75,000. You're living like a king. Not here.
and that's
Yeah,
why guys like Zoe Royalty in the chat, has to decide whether or not he wants to go to college or he needs to, pay rent for the month in New York City.
Mm,
So,
yeah.
it's unfortunate.
Yeah,
right.
even
It is.
although Manhattan is like uber expensive, um, it's cheaper in, say, the other boroughs in Long Island. That's cheaper compared to Manhattan. It's still expensive in those other areas compared to the rest of America. Okay, because in Nassau County on Long Island, those police officers making 100 grand.
That is correct. Now, once you get out of Manhattan, all right, Brooklyn, Brooklyn is Brooklyn. Okay, I really don't even need to go there. Uh, the Bronx also. The Bronx is the Bronx. I don't need to go there. Queens costs a lot to live in Queens, depending on where you live. The further east you go, um, north, northeast Queens costs more to live than central and southeast Queens. And if you live right along the border, right up against to where Long Island lives, especially in the northeast, it's quite expensive. So, Staten Island is like its own little self-contained. Being out in Staten Island is like being down south. But once you go into Long Island, it depends on where you live. If you're talking um, the South Coast or the North Coast, and also whether you're talking Nassau County or Suffolk County, because there are parts that are like there's literally trailer trash. But then you can go to other parts, and we are talking the highest property values and the highest property taxes. But even with all of that said, you can go live in, say, Crown Heights, Brooklyn, okay, which is an economically depressed area. It is what it is. It's still it's still way more expensive than living anywhere else in the country.
Hmm.
One of the things that adds to this problem is government policy. The federal government, they put in place a system where you have these huge mega cities that stretch now. You can say pretty much from Florida all the way to Maine, and on the west coast from Seattle all the way down to San Diego.
Yeah, but
And
DE, that's a matter of throughout history, your largest cities are always going to be port cities for trade. I mean, that's thousands of years, and that's still now. The largest cities in America are New York, LA, and I believe Boston, and they
yeah,
are and all three
they're
are
making super
port
cities.
cities.
They're not just making, say, New York City.
Mhm.
They're making super cities, what they call super cities. And this has been going on for, the plan that came in place like in the late 70s, I was, and then they start building up on it.
Well, I think you're going to see that change because we built cities because of looking, we're coming out of an agrarian economy, and we built cities because transportation issues, and it's just easier if everybody's compacted in that one tight space. Now with technology and so much work happening by remote, digital economy, there's really not a great need to have these super cities, and you seeing big corporations now choosing to locate in suburbs now. So we went from centralization inner city, to now we're going to leaning toward decentralization.
You sound like a
Not
you
really,
sound like
not
a you
really,
sound like a Bitcoin analyst.
not
Oh,
really because
oh,
not really because we going into a place where transportation is not going to be what it is today. In 10 years, I think the plan was like 2025, where I don't know if you see Uber and even Ford and GM are trying to get into the act where you can rent a car for an hour. You go pick up a car from a lot and you bring it back to the lot after you do your shopping, or if you run visit Aunt May or whatever.
Yeah.
This is not something that's going away. It's
Yeah,
here to stay.
and you know what? You're right because what De said, is absolutely laser accurate. His history has shown over time cities only get larger; they don't get smaller. And as our human levels of technology increase and advance, even when we have technology that can lead to quote unquote decentralization, cities still keep getting larger.
well, I tell you, I'll push back on that notion this way. I think what's happening is our definition of a city keeps changing because with the invention of the suburb, which sits between the farm and the city, the suburbs have grown and started to look more like cities. And so, in that sense, what was a suburb, people now call cities. So people who have moved from the city to the suburb. That's the way the migration pattern goes, and we just change our definition of that line blur has become blurred between where the city ends and where the suburb begins.
Hey, I need to get to this next article. We're really behind. Sorry about this. All right, next one is from BusinessInsider.com. There are signs the Knicks are for sale, but a unique problem could hold up an ownership change and make it hard for buyer to find enough money. In recent months, there have been increasing numbers of rumors about whether Madison Square Garden CEO and executive chairman James Dolan would sell the New York Knicks. It began in December when, in an interview with ESPN's Ian O'Connor, Dolan said he had received feelers for the Knicks and not bona fide offers around around $5 billion. He said he had no plans to sell the team, but as a public company, he could not rule it out for the right price. In February, the Ringer's Bill Simmons reported that Dolan is courting offers for the Knicks, saying it's go time. The Madison Square Garden company denied rumors of a sale following O'Connor's interview and Simmons' report, calling the rumors 100% false. However, the topic rose again this weekend when Dolan was even confronting a fan who yelled at him to sell the team. Dolan responded by calling security and telling the fan to enjoy watching the team from home. I don't, Paul, you know anything about this?
Yeah, there has been talk about Dolan wants to sell the Knicks, but he wants to keep. Basically, he wants to sell the Knicks, but he wants to keep the Rangers. But the problem is, he owns the Knicks, he owns the Rangers, and he owns Madison Square Garden. So the thinking is, why would anyone want to buy the Knicks without buying Madison Square Garden? Because Madison Square Garden is the real draw. Boxing is held there, concerts are held there. That's still a huge draw. All by itself. On top of which, that's where the Rangers play. That's where last year was the first year that the NFL draft was not held at Madison Square Garden. So the problem is, from what people are saying, is how can he possibly sell the Knicks without also selling the Garden? And the Garden, as much of a cash cow as the Knicks are for him, the real cash cow is Madison Square Garden, because even though the Knicks suck and they're absolute trash, they literally sell out every single home game. Every home game is a sellout, and everything is hideously expensive there. Again, on top of the Rangers games and the concerts and the boxing and everything else that goes there because it's a major venue and it's located in Midtown Manhattan. So it's easy access to public transportation.
The
So
other obstacle is that if you buy the Knicks, Paul, suppose you buy the Knicks, where are you going to play? Because now Madison Square Garden don't have to supply you with security, and you have to do all that, or you have to pay for it. And then how much money you going to be making from your team? Because that's New York in general. When somebody see you move into a venue and they say you're making money, the price of your rent is going up. That's New
Barclays
York.
Center, you
That's
could
New
play
York,
in
man.
the Barclays Center.
Raise prices.
Barclays Center, the Knicks could play under your scenario that you just asked, DE. The Knicks could potentially just move right across the Brooklyn Bridge and play at the Barclays Center if they can't pay the rent for playing in Madison Square Garden anymore. But see, again, no one knows. We don't know because clearly Dolan does not want to sell Madison Square Garden. You would be an absolute fool to sell the Garden. It's a cash cow, and it's a jewel. I mean, dude, this is New York City. All right, no matter where, if you live in a mud hut you know about New York City. All right. People all around this planet wear Yankee hats. They can't even speak a lick of English, but they're wearing Yankee hats, that NY logo. So whether it's Yankee Stadium or Madison Square Garden. So Dolan does not want to sell the Garden, but he wants to sell the Knicks. So he has a problem.
Yeah, the branding power is so strong.
Absolutely.
Yeah, and despite all of that, New York prices are going to fall just like everybody else.
What about
I
the
mean, not
Giants?
no, whoa, 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 not just like everybody. Not that. I'm not going to say that. New York will still be expensive even when prices fall, but there will be a correction to those prices. And the word earlier in the show that I could not remember was deflation. At some future show, I'm not going to put this on Paul right now because we're going to have to get Paul to teach us a little bit about from an economic standpoint. What are these terms like deflation and depression? What do they really mean? We so rarely speak of these words in the American economy. We say recession. That's as bad as we get. But these other words have some concepts we need to get to know because in my opinion, that's where we're headed.
Oh, like stagflation, because even the quote unquote economic recovery, if you ask me, all the signs really pointed to stagflation, at least the first 2 years of the so-called recovery. But Mike wanted to make a point. I'm sorry.
Oh no, no, I was just gonna say we need to get to the next article.
Okay.
All right, last article is from Quartz.com. What makes Africa's largest e-commerce platform African? News of Jamia's filing to go public on the New York Stock Exchange last week is stirring questions about what defines a startup as African. While the company runs the largest e-commerce business across Africa with operations in 14 countries, including Nigeria, Kenya, Morocco, and Egypt, it is incorporated in Germany, has its headquarters in Dubai, with its central tech team based in Portugal, and its IPO filing shows will be listed in New York. Being a German stock corporation probably means it will pay the majority of its corporate taxes in Germany, but its subsidiaries will also pay local taxes in most countries. There isn't sufficient clarity on this matter, says Ali Khan Sachu, a Nairobi-based financial and investment analyst. It's basically called African because its business is in Africa, but its ownership and a lot of the infrastructure is not on the continent. Then there's the issue of its founders. Jumia was founded in 2012 by Sasha uh, Poninek. how do you pronounce it? Jeremy Hodara, two French former two French former McKinsey associates who specialize in retail, packaging, and e-commerce, while with the consultant firm. The 38-year-olds are from the traditional background of a lot of French executives via Paris business schools. They opened a shop. They opened a shop in Nigeria in 2012 alongside uh, Tunde, a Nigerian, and Raphael Kofi Afedo, a Ghanaian, who left both the company in 2015. The other member of Jamea's senior management is the Chief Financial Officer, Antoine Millet, 49, who is also French. Jamea's new supervisor board is a bit more African with names including, I'm not even going to try to pronounce some of these names.
You got an obstacle course.
Yeah, you got to do a little bit of gymnastics.
I'm sitting over here cracking up as you reading this, man. I'm like, man, they got you with this one.
Yeah. It's also worth noting Jamea's management and staff in most countries are mostly local, including country heads. As such, Jamea's identity as an African company is based on the continent's being its primary target, its primary market. Its categorization that is often seen in the African tech space for smaller startups and even long established tech businesses. Research methodology behind reports on venture funding trends in Africa often use primary markets as a defining standard for startups being covered to be covered. I don't want to read too much into this because it's really long and doesn't. The problem is that again you have people jacking the swag of melanated people who don't look like us, and you know, using that to move their brand, um, which is a shame because people go out thinking that they're supporting black businesses and only to find out that it's some blue, some pale faced guy with blue eyes.
Yeah, there's that, but that I'm gonna look at it from another way. You're right, but on the upside,
Hmm.
it also suggests that we've reached a big change where we're in the past made in America, that having that stamp on something that was a powerful branding. Then made in China, made in Taiwan, uh now made in Africa.
Hmm.
That's that. So if a few pale faces win, uh while the continent wins, and made in Africa becomes a status symbol of sorts, I think it's a good trade. Africans just got to make sure that they're profiting from it. I think it's unavoidable what what you propose. That's true.
Hmm.
It's like when BET, there are people that still, I mean, it's offensive to me that it's called Black Entertainment Television, and what's the definition, or when a black publication gets sold to a non-black entity, what is that? What's that really mean? So yeah, you got to make sure that you're getting the money that you. I mean, everything is for sale. Everything is for exploitation.
Hmm. Hmm.
I just hope Africans just have to make sure that that they're controlling as much of it as possible. Better than say we did with rap music or anything else that we produced in this country.
De, did you have something?
No, what I'm seeing is that corporations similar to this are looking throughout Africa. And I read articles from Kenya, Tanzania, where they're going in there, and all the tech startups that come out of Africa. They're buying them up. As soon as they see that these guys got a good idea, they're buying them up. So I think that corporation is one of those same ones doing the same thing.
Hmm. Hmm. Paul Bryant.
Um, I will defer.
Okay.
I will defer.
Okay. This is open mic, and so you can bring up anything you want at this point.
I'll say this: there is literally so much going on, as I just said in the chat. There is literally so much going on in New York City. We could literally have a live stream just on New York City. All right, New York City, in addition to being the largest city in America, it's a microcosm of of almost this entire country. You have just about every economic situation here. You have almost every ethnicity to some degree is here. When I say some degree in size of the population, there is so much here that goes on. People have no clue. Even people who live here don't even know. Being in the two lines of professional fields that I've been in my life has given me somewhat unique access to see things. You have no people have no clue what goes on behind the scenes here. So I'll just leave that there for now.
But you know what's funny and what's very entertaining is to be an outsider, you know, and from the outsider to kind of look at this whole New York Silicon Valley thing and to kind of see it as one in the same, you know. Um, New York, I don't know. It's based maybe based on money, Wall Street, or whatever. But I would, you know, kind of say this is like the cats in Silicon Valley, the tech guys are like, listen, New York is like yesterday news. You know, I mean, that's like the old guard. We're like the new thing right here, you know. But again, as an outsider, what I see is that New York should look to San Francisco, look at Chicago, look at Seattle to see what its future is or what its future is going to be because the same policies and the same things that are making those cities what they are right now, you have very affluent people, you know, and depending on where they're written up at, whether it's, you know, look at the real estate this, look at who's buying that, look at who's driving this, look at who's living here, it checks off those boxes. But then also, as you see in San Francisco or Seattle or in those high income places, you have a homeless epidemic, you have unaffordable housing. And again, all I want to know is why is that? If there's so much money being made and there's money being captured via the local government from the people who are making the money, why is there such a disparity?
Okay, first off, you have to
It's a rhetorical
understand.
question. I know the answer, but I still ask.
Well, first off, you have to understand several things. All right, Wall Street and the business world are two different things. That may sound like a contradictory statement, but hear me out. Business makes its money and makes its money in the realm of Main Street. All right. Wall Street is where the wealthy and investors make their money. And they're two very different and separate things. Now, everything in this city revolves around the financial district and the advertising district and all of the companies and corporations that are headquartered here, and they happen to be in close proximity, obviously, to downtown Manhattan, which is the financial district. So everything around this city is so expensive and basically revolves around that, this being the economic center of the entire world. Now, with that said, I understand what you're saying as far as vis-a-vis the tech sector and how that's driving the new economy and creating new wealth and so on and so forth. And yes, you're right as far as that goes. However, this is still New York City. This is still the economic capital of the world. So basically, picture it like this. What you have is you have a sun in the middle, and that sun is the financial capital of the world. And everything that revolves and gravitates around that basically is everything and everyone who lives and is and resides here for whatever it is that they do, their life, their economy, everything revolves around that center. That is New York City. Now, that's not in any way taking a counter position to what you just said as far as Frisco, but New York is completely different and unique from what Frisco is, and even from what Silicon Valley is. Okay, it's not. So when you're comparing New York City to Frisco and comparing it to Silicon Valley, you're really comparing apples to oranges.
Did Mike? Did you look at that video that I sent you? Well, I sent you a couple of videos, but the first two.
Thank you. Respect.
You gotta be more specific, D. Which
The one made by the U.S. Army and I can't remember the second one about
I,
cities. The one about mega cities.
oh yeah, yeah, yes.
Well, sorry. That video. We started talking about that the last time we were talking about economics,
Hmm.
and that's why I said I want to send you a video. Take a look at it, see what you think. But right now, the thing with New York City is talking about that. How can we fix New York City? And there's no way to fix New York City because it's going with even with the changing technology. That's what they're worried about. That the technology is going to allow the city to become uncontrollable. These huge cities that they created are going to come unstable and uncontrollable and get chopped up into little like kingdoms and government is not going to be able to function. It's going to be like little criminal organizations that are going to control areas that nobody can go except for the people that live there.
I always thought that boroughs. I always thought that the boroughs were kingdoms.
Well, yeah, you have a borough king. You have a guy who was in charge of the borough that that's supposed to, he's like supposed to be the ears of the mayor in that borough and the city council. But really, he does act like a king. You know what I'm saying? In a
Hmm.
manner of speaking. Yeah.
I mean, New York can barely. It's going to get to a point in New York where they just ban driving altogether.
So so so
See,
so then
the thing
so
with
then
that is,
so then you know
Well, they already started. That's why people are moving from out the outskirts of New York City. Well, people call it suburbs, but outside to where they can walk around the city. They're building restaurants right next door. They're putting bike paths in, and you're able to walk down the street to the restaurant, walk to the subway to go to Manhattan instead of having to drive your car to Hempstead from what do you call it, Southport, from Southport to Hempstead, park your car, and then go to Manhattan, and then come back to get your car, pay $50 per hour in Manhattan. That's why people are
so
moving back into
whoa, whoa,
the
so
whoa,
city.
so
whoa,
so then
whoa,
so then
$15 per hour?
Well,
Yeah,
when I say $50 per
maybe in
hour,
Harlem,
the last time I parked my car in New York City, they charged me $38 for 4 hours.
bro. That's good.
So you see what I'm saying?
That's
It's almost
good.
like you're laughing at me now.
I am laughing at you because when I that's that's good.
Yeah,
That was a
I
good
know.
price
I made a deal on that.
for
I
Manhattan.
went
That was
to
a good
my,
price.
they didn't even have parking spaces.
that shit sounds like a prison camp. God, Jesus Christ, literally.
Yeah,
Um,
my father is he's kind of handy with computers, and this is a while back. A friend of his who worked for ABC. He talked to his boss and finagled it where my father could work for ABC. And my father went in and interviewed for the job, and the guy offered him the job. My father saw the transportation and parking nightmare that you guys just explained. He turned the job down.
Well,
It's impossible. So you can make a lot of money, but a lot of people that are like commuting from Long Island, they spend a lot of money in that transportation, a lot of time too.
I got a friend of mine, right? He's got a house in Brooklyn, but he can't live in the house because it costs too much. So he bought another house in Jersey, and every day he commutes across the George Washington Bridge to ABC in downtown Manhattan.
So I mean, again, I'm just gonna go ahead and speculate for the most part, but it seems as if like these things are like slow moving, and slow moving I mean maybe 3 to like 7 or 9 years. And should the narrative, the talk, the conversation be about how brothers, fellas, people, communities can be more opportunistic in these realities that happen, or should it be more join a collective group that tries to prevent these natural things from occurring? Because there's an old saying: if you've been alive long enough, you've seen everything twice. And honestly, this is nothing new.
Yeah,
So,
but
like
when
the
you
best move, yes, sir.
okay, like the move to Harlem, how many of the people who own um, brownstones in Harlem saw that it was going to do such a massive turnaround? And you know what caused that turnaround? Hillary Clinton, Bill and Hillary Clinton. From the time Clinton says, I'm going to open an office in Harlem, the price of houses almost doubled. And they
So,
started kicking people out. So
so,
you have to have a group who is saying, look, you know what? We are not selling our house. And if somebody's going to offer
or
$1 million
I
for your house, are you going to take it?
but then I mean, if that didn't happen, and I apologize, I don't know the details of that situation, but I'm sure there were people who did benefit from that. And could the average Joe Schmo be in a position for in the future to be in a position to benefit from that? I don't know, maybe not, but obviously there were people who benefited from that. There were people who didn't, and there were people who did. So my question is, should the conversation moving forward be more aligned to how do we see these things happening, and how can we position ourselves to benefit from it, or more so that these natural occurrences that are going to happen are going to happen, but we just need to stop it because it's wrong, it's evil, and it should never happen. I mean,
Can
me personally, I'm in the camp of it's gonna happen.
can I speak to that possibly?
And then I
Number
would like to
one,
follow Paul. I would like to follow Paul.
number one, if you sold your property on the way up, you sold into strength, you benefited. If you bought property and then you rented it out, you benefited. Outside of those two scenarios, there was literally no way for you to benefit. Now, to the second part of that question, that is a question that can go a lot of different ways. I will say this: the Black Brain Trust one speaks directly to what the question you just asked. To recognize things of this nature, ways for you as an individual can put yourself in a position to take advantage of these situations. Black Brain Trust literally talks about things of that nature. As to the last part of that question, you know where that's going to go. So that is outside of my world. I will defer to Dollar Will.
Uh, my function here is to change as best I can, change the way that we think about these events, to recognize that they're natural and to some degree predictable, and that we have to go with the flow. No, Preem, we should not fight and resist it. You can't stop it, you know? So it gets cold every winter, it gets hot every summer. Ain't nothing you can do about it. Okay. Markets overshoot the top. I mean, they overreact and create what we call balloons and bubbles. Okay. And on the downside, they fall to extreme lows. That's just the natural cycle of things. When the property in New York didn't go up because Bill Clinton showed up. Bill Clinton showed up because the property was going to go up. Okay, these things are not. You have to be a trader to understand that. And if you're not a trader, you either have to trust the trader or learn it, because you can't use what like lay logic. As no, it's hard for people to believe that these things are to a degree predictable. But you have to become a technical trader to understand it, because you'll see it even if you doubt it. You'll see it enough where you can no longer doubt it. 2 years from now, when we're experiencing devastation, you will have experienced something personally, and you will look back and see that only the technical traders told you the right thing to do. It's only when people live through it that they have this change, this paradigm shift in the way that they think. It's hard to get people to that point until they either learn about it in advance or experience it personally. So everybody here is fortunate that they are getting this information now. You'll be more convinced of it as time progresses. A year ago, when it was a year ago and approaching December, when I was telling everyone that I wouldn't buy cryptocurrency and Bitcoin with your money. And people thought that I was against cryptocurrency. I was giving a point of view from chart reading. And now, a lot more of them the people that heard me say that, they understand now because they experienced it. Now they want to know what the technical chart says. So stay tuned to the Black Brain Trust. We put brothers on game.
You are correct that these things go in cycles.
Yes, they do.
Some go like our economy. If it's not the capitalist economy, if it's allowed to, well, the monetary economy, if it's allowed to function as without like tax, the last tax thing that we have, it goes like 7 years, 7, 8 years, and then you go to a down cycle, and then you go back up. The housing market follows that about 14 years or so. This big, huge depressions that we go through about every 40 years or so. So yeah, the cycles repeat themselves. But we also add to either how bad they are or how not so bad. You know what I'm saying? And a lot of moves.
We're a part of it. We're connected with the cycle. We are the cycle. We create the cycle. It's us. It's our consumption and our demand, and that's connected to the cycle. More the baby boom created the demand for all these houses to be built, and then and everything else that people would want or need. It's connected.
Yep.
Africa having the youngest population on Earth. That's why everybody knows that with Africa being so young and China being so old, that's why every company in the world, in every country, wants to have a foundation of some sort in Africa, because Africa's economy, or the long-term plan data, says it's going to grow, if from nothing else, but young population and lots of resources. The older civilizations like Europe and America, those countries, those economies are going to slow down relative to Africa because we're so mature, especially China. So those countries that are able to have a footing in Africa will be able to steer resources from Africa to their country. So we're having this conversation now, and we know that's like, the future. So the data shows you all of that. And the economists that are, even the fundamental economists, the ones that study mega trends, long-term trends, the technical traders and the long-term fundamental economists, they don't have like a whole lot of disagreements.
One of the things,
I would like to add something on. I'd like to put forth a scenario. All right. Since we talked about real estate and how to benefit, right? Like to share some personal experience and some expertise. All right. Um, my business partners and I, we invest in real estate. We individually own properties. We mutually own properties, residential and commercial. So, at time when property values were higher, if an individual had a commercial property, all right, and if he was seeing comp sales, say for 3.5 to 4 million, now with the market downturn and the real estate downturn, he was seeing comp sales in 3.5 to 4 million. Now he's lucky if he's seeing 1 million or 1.2 million. Conventional wisdom says this is not the bottom. It's still going to go lower. Okay, so some people would say, no, you want to wait until the very bottom and get in. Right? That's what I was taught in college. That's what I was taught in business school. I went to work on Wall
one of
Street.
the things that you're
Taught
going to
something.
see, sorry, go ahead.
What
One of the
I
things that you're going to see is that with the same thing that's affecting Social Security is going to affect the housing market now, because you
right.
don't have what you having is not enough people, not enough young people in the U.S. because of the population um, not replacing itself.
Which is
You don't
what
have enough people going into Social Security to pay for those who are ahead of them, and the same thing is happening in housing. And
right.
it's not noticeable yet, but with the coming, I don't know if it's going to be a recession as they like to call it, but me a depression where prices going to be going up, but people are not going to be making enough money
But see,
until it starts heading down really hard, and you have no
that's what I
people buying
wanted
houses
to
and no
speak
people
on.
buying cars. So what's going to happen to the economy then? Because the houses that up for sale, nobody there to buy them. No
Right,
replacement people.
but see what you have to do. All right, there is something on something on Wall Street that we're taught. It's called you always sell into strength and you buy into weakness. Okay, so as I was saying, if you're looking at a commercial property, all right, and if you're a owner, so now the value was very high. Now it's down, it's depressed. Everything is telling you the market is still going to go lower, still going to go lower. If you own this property, most people in that position, they don't want to sell because they lost a lot of money. Okay, they're also being told that the bottom is coming. So what they want to do is they want to get out. All right. So what I'm trying to say is, in a situation like that, I myself and my partners, we see opportunity. We're not necessarily going to wait until it goes all the way down to the very bottom. We're going to get in now because it may be 6 months, maybe it may be 24 months. It's going to come right back up. So now we're faced with the situation is we got it for cheap. Now it's a lot higher. Do we want to sell it or do we want to maintain that revenue stream and roll that over into other projects or maybe leverage it to do something else? All right. So what I'm trying to say is even though we're not at the bottom now, right, we've been buying commercial properties. That's where you want to be. So to speak to what Preem said, right, real estate, it's, bro, it's a large part of what I do physically and also with the investing. Get into real estate. It's not the bottom now, but you will be in well positioned to win, to ride everything out and make a tremendous amount of money. And it's really that simple. It's real estate.
I
It's
think
real
we're
estate. You
very
have to
early.
own real
I think
estate.
we're very early in this downturn. I think the lady just finished singing the national anthem. I think it's way too early for us to think that we're anywhere near bottom. We haven't even thrown the ball up in the air to jump the ball. It's just getting started. We just had a retest of the as close as we've come to a retest of the high in October. So this thing it really just started. Well, October started. It just resumed today. So at some point, tonight, Mike, I do want to just do a very, very extreme. I'm really going to be short with the chart thing, but
Hey, go right ahead. Go right ahead,
no,
brother.
I want everybody to finish up
If
on
I
this.
if I say tonight to people, some people, I say, look, the Dow Jones is going to go down to 10,000. People will think I'm crazy, but I've seen this. In 2006, I said the same. I started telling guys I work with. I said, look, this is going to be bad. And
How
they say,
old were
no,
you
no, no,
then?
no, no.
How old were you then?
In 2006, I was
Yeah.
50. I was 52.
Okay.
But you can see the signs. You can the same thing that's happening now was happening just about 2004. The housing prices were starting to stagnate in Florida, but you're still finding places like areas where the prices were still up. And a lot of the big properties in New York City, the Japanese were, well, not Japanese, the people who own them were trying to sell them, and they couldn't get them sold.
Right.
So
That's the problem. If you
it's
wait
just
too
like
late
now,
to sell,
it's
yeah.
like people are selling, and you're getting a price here and there because people are seeing what's happening. They want to get out, but some people are saying, you know what? Why would I buy when I can buy it lower?
Right.
So you see this thing where people are going on hold, and then when the bucket drops, everybody will say, hey, now I'm gonna wait till it really starts, you know, and it's gonna roll right across America. It's right now out, and people are not talking about what's happening in L.A. and San Francisco, but it's happening over there.
Right. And that lower prices that you just painted about, what happens when the prices go lower. People drag ass and they don't put a contract on the house. They come back a month later. The real estate agent then made the seller lower or encouraged the seller to lower the house. And so now the potential buyer realized, wait a minute, I saved money by waiting. Now they really don't have no incentive to hurry up and buy. And so I'm in the deflation camp. I think we're going to see a lot of prices for goods go down, not up. As we discussed earlier in the show about what makes New York so expensive, that the dominoes starts set up to make prices go up to basically pay the rent, pay the rent. Well, when real estate goes down, you're going to see those other prices come down because people are not going to be able to afford it, and rent is going to go down too.
Yeah, I agree with you. And you were talking about something earlier tonight with GE. GE is one of those companies that, um, when the economy starts going bad, is like, in 2006 when the financial market started crashing. Everybody was saying, we are good, we are good, we are good. And then when the first when the large, when the one that everybody's saying we are good, when that one fell, then the others started going right behind it. And GE is one of these companies who's going to fall really fast
Right.
because their debt is people not looking at their debt and seeing the story with GE at all.
Right. See, in a rising and a growing economy, it makes sense to go get that loan from the bank to invest in future growth of the company, because you know that the profits you make off of that invested money that you got from the loan, it pays off in greater profits. Now, when the economy turns on you and you got that loan sitting there and your sales are not going the way they had been trending, now you're gonna get strangled by that debt. You know, so I asked how old you were in that last downturn just to get a sense of, you know, how involved in the economy. You know, at your age, yeah, you were very involved. So you lived through something right there. You experienced that. So and it's hard to you know, to convey that to other people. You know, you were around to see what was going on and hear what they were saying on the news. And the news was painting this rosy picture. It took
Oh
a
yeah.
long time. It took a long time for the news to reflect the truth. You know, so until you go through it one time, it's kind of hard to you know,
Conceptualize it.
explain to people. But I want to try this real quick, okay?
Go right ahead.
Look, one of the problems I find with black people especially is that um we look at our paycheck. Um, hmm, but we don't look at 10 years down the road. You know, instead of you just say, well, I'm making 50,000, I can buy a car. Most don't say, well, look, if I buy a car for $40,000, if I buy a house instead, I might come up better. You say, well, I want a new car. You know, husband and wife buy a new car and lost the house. I see that in 2008. You know, they end up losing house and car, both cars and the house. So we don't look at these things. We prefer to go look at we go on I don't know some Facebook and look at, you know, two black chicks or two idiots fighting, you know, and enjoy it, but wouldn't spend the time looking at the, even Business Week, which is not really that great, but Business Week.
Yeah, let's see. I'm just gonna run through this real quick. To get a more detailed reading, you gotta go to a video I did earlier today. It's like an hour and 15-minute brain dump. Okay, I did it during the market day around, I think it was around 1 o'clock. And I was explaining what was going on as this thing started to drop. So what we have here is the S&P 500, a weekly chart. Since 2009, this is the ride up. We got the big support here showing 5 count, 1, 2, 3, 4, 5. Okay, this is the January high when I was wrong, when I thought that was it. And then this is the October high. We broke the support in October. Support became resistance. So we were overbought here in October. We went down to oversold. We came back up to overbought. And we didn't make of course, we didn't make a new high. We also didn't even break this former support. Okay, now I just moved to a daily chart of the exact same thing. I want to show you kind of where we left off today. The drama. Our stochastic shows that we have a flip right here. The momentum is the orange line is fast line. That's momentum, so it's negative. It's already flipped. Yesterday, when the interest rate, when they basically said that they were going to pause and not necessarily raise interest rates, I don't really care what they said. I don't believe it. we will have higher interest rates. Okay, so we had a pop. We made a new high yesterday. This is very telling about how quickly things move. Yesterday's announcement came out. Market got excited. But was that genuine optimism, or was that people shorting the market, entering short positions? So yesterday we made a high. Since the run that started, no. This is since March 8th here. This whole run, just to get perspective, this part started Christmas. So this is the entire run from the October low, from the October high, fell to the low on Christmas. We've been enjoying basically, a 2.5 month run since, or basically 3 month run since Christmas. And in that time, we didn't take out the prior support. We didn't make a higher high. You could actually say that this is a reverse head and shoulders. This would be the left shoulder. That would be the head. This would be the right shoulder. This right shoulder didn't even go above the left shoulder, which was January. The crucial thing that everybody's looking at is this support right here from Christmas, to see if that price breaks it. Now, as big and convincing as that move was yesterday that made a new high, we turned around today and completely took it away, just destroyed it. We took out, let's see, this candle's price level on the 13th of March from a high in one day. We took out, what's that, 9 days, less calendar days, but we definitely took out a week, more than a week of trading. And we had done that pretty much by 1 p.m. today. Okay, so like in 3 hours, about 3 hours, 3.5 hours today when the market opened, it had already destroyed a week of gain. Now, this is following the optimism from the previous day when we made a new high. So we ended this week resting right here on the trend line with the momentum going south on the daily chart. And if that breaks, oh boy. So we're overbought. I'm sorry, yeah, we're overbought on the daily. We've already had the cross, and on the weekly chart, we're also over bought, and it hasn't flipped yet, but it's close. It's getting close.
Yeah, from what you're saying here, from what you're pointing out here, if you look at the market Sunday night in the Far East, and they are going down, you can bet we're gonna go past that.
I'm not gonna put it all on that Monday. I'm gonna say definitely by the end of the week next week, because a lot of times what happens, it's kind of weird that in a bull market, and I would say everybody really needs to make that investment this weekend and listen to that hour and 15 minutes that I put down today. I just said that a serious brain dump. But when in bullish markets, it's greed versus fear. Okay, when markets are rising, we're greedy, and we want to keep our money in the market. In fact, we're looking for more money to put in the market. And when the weekend comes, we want to be in. We're afraid that we're going to miss out. Now, when fear comes in the market, that's when you get a big sell on a Friday at the end of the week. So when people don't feel comfortable leaving their money in over the weekend, and we had this huge decline I was talking about, here, that's telling you everything you need to know about the level of confidence that people have in the market. I don't need to read an interpretation from a reporter. This is telling you right here that we took away more than a week's worth of gain in 3 or 4 hours. So nobody feels comfortable with that. Now, a huge decline like this, I wouldn't be surprised that even Monday and Tuesday if we retraced a little bit of this. But sure enough, when we get to the second half of the week, it's going to be more of this. So the best case scenario, or the most optimistic thing I can say, is that Monday and Tuesday, you may get a bounce up, partially part of the way. But I feel pretty good in saying that it's not going to take out this high, and we will resume and break this support next week. So that's, hey, I could be wrong. I don't have a crystal ball, but I'm looking at this this momentum flip here, and maybe of course I'm biased because I've already have my long-term thesis, and so I'm not exactly objective. I'm trying. That's my struggle, to remain objective and not be persuaded or tainted by my own long-term thesis, which is hell is here. But we'll see. So I just wanted you guys to see this support, and you can go to bar chart and make your own support, and that way you know what to be watching for. Also, I have this pulled up. This is the major market sectors, and this is the performance for just today. I like to look at the sectors to see where the money went, which parts of the economy in terms of their stocks, which one bled the most, and which one bled and which one led. Put it that way. Who made money? Who lost money? Okay, so the biggest loser was the S&P 500 basic materials. That's where you're gonna find your steel, your aluminum, your gold, your oil, your metals. That's all of those. No, energy would be here, I guess. But basic materials that you need for construction type things. Okay, all of that stuff is dollar centric. So strong dollar is going to benefit from that. Money's going to rotate from these materials and these other currencies to the dollar, and you're going to see more pain here. And if you recall, or if you don't recall, you can pull up the Black Brain Trust during that decline, let's say leading up to Christmas. Just listen to the economic show closest to Christmas, where we showed which sectors made the money in the decline from the first week of October to Christmas. And I clearly recall the industry that made the most money back then was utilities. Okay. Utilities use energy in order to sell you energy, so, provide electricity to you. So when the material that utilities need gets cheaper or projects to become cheaper, money goes into this sector, utilities, because utilities get to run their business at a greater profit when the consumable item they need gets cheaper. So just as the place to make money from October to Christmas was utilities, it's going to be the same now. It's like back when you were a kid playing Monopoly. Once you went broke from buying all them daggone hotels, you start buying those utilities. But when it was when you were making money off buying homes and hotels, you didn't care about no utilities. And so we're in those tough times now where you need cash if we're going to make a parallel between the Monopoly game and life. Also, consumer staples did up. It was marginal, just 0.23%, and that is the place to look. So next week, I'm expecting to see this go green. But so these are basically the two places. Real estate didn't do that badly, but it's going to join the party, and so we'll see, Paul, how you feel about it when you see real estate start taking a dive. Because everything that rose, it's gonna have to give back. It's gonna have to give back some of that gain. It's a time to buy and it's time to sell. But the final thing I want to point out to you is when you're listening to the news and they say to you, the Dow dropped 400 points or 500 points, that's garbage information, okay? That does you no good. What you want to know is what is the percentage of the decline, okay? 400, 500 points, that means nothing. 2% declines are rare. That is rare. And so when someone tells you 400 or 500 points, you need to know, did we have a 2% day? So we had six sectors of the economy that declined 2% or more, and this was close. That's pretty. This is healthcare, okay? So that's pretty ugly. This is the truth. These numbers don't lie. So this is where you have to take your opinions and your feelings, and you have to put them aside and be pragmatic and accept what's right in front of you. Okay? So we're looking at some serious destruction, and every week I'm gonna bring this chart up to keep us focused on what is and not what we think and what we want it to be. That's it.
Thank you for that, Dollar Will. Any closing thoughts? From Preem, D.
Yeah, just as a real quick ancillary thought. Had an opportunity earlier this week to go out and network with a group organization that's kind of ancillary to my company or our company and what we do in the home services sector, and they're doing great. Again, we're in the home services, but one of the professions or groups that we network with are designers. And if anybody has ever hired, or their wife has hired, or their sister, auntie has hired an interior designer or a decorator, it's a professional field. I'm not in it, but from what I've seen and having networked and worked with this group for like the last 12 to 15 years, we're seeing the biggest turnout of folks in the industry, of new hires in the industry, of people transitioning from steady jobs. I met two young sisters, African American females there that were, in good jobs. I would, guess, pulling anywhere between 60 and 80K a year, in traditional degree jobs that were just unfulfilled, felt unfulfilled, unsatisfied, that were transitioning into this field, and just linked up with a company that couldn't find enough new prospects to come in and to mentor to kind of hold their hand and to bring into the industry, So, and again, when you look at something like that, it's like, okay, of course, this isn't serving the lower end market, and it's not serving the yacht market, but what it shows or displays is discretionary or disposable income just being outlaid. So, and not just from the standpoint of it sustaining or maintaining, which it has been for as long as I've known this industry, but I mean, in what month? March, for the turnout in the meeting to be what it is, and for like one of the young sisters told me that when she kind of put in her resume or whatever she put in, to see who was hiring, she got hit up by 3 or 4 companies because they need people. And again, you're talking about their clients are the folks who maybe some of y'all out here who are just too busy, or wives are just too busy to do the decorating. And it's like, hey, I know what I want it to look like, and I'll pay you 10 grand for a month or 2 months of your services to coordinate my living area, my mudroom, my bedroom, my family room, my patio, my pool area, whatever. Not including, of course, the furniture, but just their creative services. It's booming. It's booming. It's booming. I wouldn't even say booming is actually an understatement. So, I mean, there are things like trailing. and there's things like winds or trend wings or four winds or whatever. But I mean, not just that, but the real estate partners that we partner with that are actually buying and selling real estate, and of course, all the ancillary services like ours that us that service them. Things are, I mean, things aren't slowing down. Things are not slowing down at all. You know, because we're there every day, because that's how we eat, and that's my final word.
Yeah, it's not slowing down for you, but all the government data says it is. Okay, so let's not debate that.
Bro, I mean, I just gotta wipe my ass with that because I'm
Okay.
right there
Good.
every day.
Okay.
I'm there. I know
Okay.
more.
Gotcha.
I know more than the data because
Okay.
I'm there.
My only other closing thought is to say, consult a financial advisor, your bank. A lot of times, financial institutions like your bank will give you free consultations because you're a member there. Use it. The brokerage that handles your retirement account this week. Your job this week. Your homework is this week coming up is to call them and schedule an appointment for you to sit down and talk to them. Your financial future is at stake. Okay, so you got the brain trust giving you information. We're gonna be posting things where information where you can do some self-study or equip you with enough information here that where you can direct your own study and use this information you learn here to help you form your questions to be able to get the most out of that meeting with your retirement administrator. This is the time to talk to them, and when you go there, you want to ask them. It's a given that that the person giving you information knows fundamental analysis. That's a given. You want to ask them, do they also know or take into account technical analysis?
Hey, let me just get a quick 10 seconds, Mike, if that's possible. And I don't know where I heard it or who I heard it about, but what the most successful or best companies, Wall Street hedge funds, this and that guys do, they have these departments to where they kind of deploy these folks that are there as I forgot what they call them, like in the interns or whatever, and they deploy them. They send them out. They say, go out there and see what the feel of the market is, what's actually going on. Get out there in the street, come back and report. They go out there and they see what's actually happening down. They get the sentiment. The stuff
you interrupted me to continue that.
Just wrapping up really quick.
You interrupted what I was saying to take it back to that.
Go ahead, brother.
I'm trying to protect and give people some objective information how they can protect themselves, irrespective of us having a difference of opinion. The thing is for them to go and speak to a professional advisor and ask the right questions. And the right question is be sure that that person giving you advice also has a technical perspective.
And
if they're not, then you might have to find somebody that you pay to get it. Okay, so that's
okay.
Economics. I'm sorry. Real estate is a lagging, what's called a lagging financial indicator, right? So it is not a direct indicator of the overall health and strength of the economy, and it's one of the sectors that tends to feel the pain last. So, in 2007, when the economy started tanking, construction and real estate were two lagging economic indicators. They did not feel that hurt and that pain until 2009. When things started to turn around toward in 2010, those two sectors did not start to turn back around until the very end of 2011, beginning of 2012. So real estate is a lagging economic indicator. So this is something that is a historical fact. So my point is, just because real estate and things related with it may be doing well now, that is not that is in no way a sign of the overall strength and health of the financial sector, which is why myself and the individuals who I work with, we are selectively buying certain properties, because real estate, as in general, right now is not the sector to just be um, freely buying left, front, and center. That's my closing thought.
And I'll say this, Premium, it's a good news for you. You're in the home services sector. When the economy goes bad and people want to sell their daggone house, they're upset that they missed being able to sell at the top. They bunker down. They stay in that home, and they might fix something up in the home. They're gonna try to clean that house a little better or repair something to make them feel better. Young Grizzly owns a barbershop on the side. Those businesses do well because sometimes the only thing you can afford to make yourself feel better is a haircut. Because you sure ain't going to restaurants no more, because they gonna take it too. Those restaurants they gonna feel it bad.
And keep America looking good.
Again, if you have someone selling, you always have someone buying. You know what I'm saying? So if someone is ass out, someone is ass up. They're all in the home services sector. Okay,
I tried.
that's why, and that's why it's never going anywhere, nowhere, no time soon.
Were you in business in the decline from 2007 to
For
2009?
infinity, bro. For infinity. It's not going nowhere, no time soon.
And you noticed no change. It didn't affect you at all.
What does?
Your business was not affected when the market downturn in 2008, the 2007 to 2009.
Oh, yeah, of course.
So what is your point?
Bro, say la vie. That's life. That's what I signed up for.
I want to get DE. I want to get DE's last closing thoughts, and then we can just close out this hangout.
I would advise, Donald said it right. You prepare. You look for the signs, you prepare, and one of the things you do is, he said, find a financial advisor if you don't know how to do it yourself. But one of the things that I like to tell people is, like, a lot of our people don't like to look at this information because to them it is boring. Um, they want something to entertain them, but it's only when that they find themselves in a position that they can't support themselves that they start crying about they don't know what happened. They blame everybody else for what happened and not themselves. And you got to take the blame for things that happen to you. So start looking at, take the information that you hear and start looking at it and say, well, what can I do to mitigate? You can't avoid all of it, but you can mitigate some of it. You can help save yourself a lot of grief when things start happening, because you can see the signs. I mean, Dollar there had a graph up there. He showed you exactly what the graph is telling you, and these things don't lie because people have been watching it for now a century or so. So pay attention to what's going on, and if you need some help, start reading. That's all.
All right. So thank you all for joining us, and we will be back tomorrow on Black Tech Talk for Infrastructure. And we are out.
All right.